is really having a larger investment going in from a manufacturing standpoint, and therefore we are expecting a lot of production linked incentive schemes that may get announced over the period. And we already have 14 investment schemes which were or rather the 14 sectors for which the PLIs have been announced since the last 2020 onwards. But we are hopeful there are more sectors, especially on the railway manufacturing sectors such as textiles, toys, furnitures, and especially on the electronic sector, that we are expecting a lot of investment flow, and therefore PLI would play a very important role. And I think India Inc. is really keeping a good watch on it as well. Second area where we believe that there could be some level of what I would say, some proposals that may be floating in is also again from the perspective of making a more tax neutral country that way. So we are expecting, even from a corporate tax standpoint, could be the 15% manufacturing benefit that they keep giving for the new setups. We're expecting probably the government may extend it, and may extend it for few specific sectors also, specifically on the green energy side, specifically on the infra side, where the real investment lies in. And I think generally for the common man, if in case there is anything from an income tax standpoint,
more money for you and
yes,
me.
Absolutely. I think everybody has a watch, and it's a 3.0 version of the government. So we're really looking forward that if there's something really lying unfold for the common man as well.
Yeah, in fact, since you spoke about taxation and more money for you and me, and there are two ways the government can do that, right? Either they help us with cutting the tax slab, which gives us a little more money and we can go out and spend, or they can bring in more schemes and incentives for us to save, right? So this time I'm expecting that they would try and boost consumption a little bit, because consumption had fallen last time, right? Just to give you some quick numbers from the economic survey that came out yesterday, which will kind of tell us where the budget is headed. Real GDP growth was at 8.2% in FY24, which is pretty healthy. India is the fastest growing economy in the world right now, and I think we are well on our way to becoming the third largest economy. We just have two countries ahead, like Germany and UK, that we have to overtake. They're very close. Of course, after that, you got China and US, which are a big gap. But I think 2047 we should get there. Viksit Bharat, we are developed economy by then. GDP growth is seen again for the rest of the financial year at between 6.5% to 7%, and the CEA did mention that it's a conservative expectation. Inflation numbers at 4.5%, pretty healthy. I think that's good enough. And real inflation, he said, was below 4%. So, which means, I think, just for a bit of food inflation, which kind of took the numbers up in the last few months, it has otherwise been under control largely. Our borrowings also are not too bad. We're at 18.7 external debt, 18.7 of GDP, 18.7% of GDP, and we have a fairly healthy services exports, which is up 4.9% to $341 billion. So these are the top numbers. Punita, given these numbers, what do you expect in the budget, the areas that you kind of tweak over here?
So I think, like you lastly mentioned on the export, I think we are, and the government did announce a plan on being a $2 billion export economy by 2030. I think there'll be a lot of focus on increasing the export footprints for the country. We'll be seeing some of the sectors, specifically on the MSME side as well, equally. Like I said, there would be a lot of investment flowing in for companies to really expand their footprints into India from a manufacturing side. The other piece is also, if we did hear one of the statement by the Honorable Finance Minister in the survey itself, that we are also trying to plug ourselves in the global supply chain equally, right? So I think the larger piece would be, how do we really don't go completely flamboyant on the manufacturing side. Yes, try to do some assemblies and things around that, so that we can build ourselves as part of the overall supply chain globally. That's one aspect. I think the other piece is, which again I think we will allude to, is also the job generation. I think that's one of the critical aspects this government really needs to look into. How are we generating new employment, for the larger group of people? And while the government did give some stats in terms of that there has been an increase,
Yes.
it seems, in terms of the population within a particular category where there's been a 10% growth
Yeah.
as per the survey,
Yeah.
even from an employment standpoint. But I think measures around more labor-intensive related productions to take place, more
Right.
labor-intensive incentives and subsidies to come in. So those industries and sectors to be focused so that we have a more larger interplay of labor coming in here. But I think the other side to it also is on the AI. How do you really upskill the people, because there is a loss of
Exactly, he mentioned that
employment,
yesterday.
which one may look into because of too much of automation and digitization, and anyways that is the need of the hour. So how really you upskill people and they're more from a technical standpoint, and let that job opportunities also go inside. Even with the integration of AI and technology within the larger sphere.
Yeah, in fact, the CEA did mention in the economic survey that the unemployment rate is at 3.2%, which would seem small, but with a country of 1.4 billion people, that is still a fairly large number, right? But the good news is that the EPFO payroll additions have kind of doubled, which means there are more people getting into the salaried ecosystem, which means that there are jobs being created. That said, he did point out that 7.85 million jobs per year need to be created till 2030 if we have to maintain this kind of growth. And the big gap there again is on skill sets. You just mentioned upskilling is needed. And he did make a very interesting point about AI. While they did talk about the need for regulation for AI, he said in the short term, there will be challenges because of AI, that jobs could go away because of AI. But for the first time, actually, somebody is coming out and saying that jobs could go away because of AI, and that in a government document, right? But he said in the long term, there's potential after you reskill the people, there's a potential. That said, there was still another stat, which was 63% of companies reported a talent shortage, especially in the IT sector, which means there are still a lot of IT jobs out there that need to be filled. And but they don't have the right skills, because of the entire youth that's employable, only 51.3% of our youth are employable, which means the rest don't have the right skills. So there's a skill gap there, which can be met through the IITs, IIMs, new technical institutes being set up, I suppose. I think we might see something of that in the budget.
Absolutely. And also, while this is just on the IT side, I think there's equally, there's a lot of impetus on clean energy as
Yes.
well, right? And I think one of the focal area for government, which has been, we've seen in the past as well, the trends have been, they're really focusing on larger investment on the clean energy side as well. And I think there again, a lot of upskilling, just connected to this, the previous point, is required, across, just to get aligned with the kind of technologies which are coming in, and one needs to adopt to really, excel the game of clean energy and getting to your targets. So therefore, I think that's again one of the area where we would look into some policy measures which will be introduced by the government as well.
Right. And let me just bring Sumana in here. The stock markets have been on a roll, and the CEA did point out about retail investors getting into the stock market in a big way. Another interesting trend is that the RBI governor, who recently spoke at our FE Modern BFSI Summit last week, he did mention that savings are no longer going to banks. People are now putting their savings more in mutual funds. And while the risk may be slightly lower compared to directly participating in the equity markets in mutual funds, it's still an interesting trend that banks are no longer getting all the household savings. And that's it. Sumana, you've been tracking the stock markets for a while, and the markets opened up about 200 points today, and we are at close to all-time highs, and we'll probably see more all-time highs in the next few months if it's a good budget. Where do you see the markets headed?
If you see the trend this morning, Roshan, there's obviously a bit of the cloud from the way the markets had responded on June 4th seems to be hovering over the stock markets today, while the GIFT Nifty indicated a positive start and our markets opened higher. But increasingly as the budget time for the finance minister's speech is coming up, the markets are kind of losing steam, and right now we have both Sensex and Nifty in the red with over 1.5% cut in the metal stocks especially, and even the rate sensitives which are kind of waiting for the finance minister's speech are under pressure right now. Interestingly, what is good is right now at the moment both Nifty and Sensex are holding on to key levels. Nifty is hovering around the 24,500 level, Sensex is around the 80,500 level, a slightly lower but more or less this thing. But when we are talking of markets lower in the current scenario, we will also have to think about the way the markets have been performing, like you were rightly pointing out that the RBI governor talking about why savings is no longer the popular instrument for people to kind of shore up their pension kitty or however. For example, from June 4th till yesterday's close, the Nifty is up 12%.
Okay.
And the Sensex also is around 11.7% up in this period. It's just like a little over a month. So these are the kind of gains that we have been seeing. What is interesting in the current trend is FIIs who have almost banished the Indian markets, like they have been net sellers for 2 months consecutively, both April and May. They have made a comeback. India is back on their shopping list. And if you see in July, just in the last 22 days, FI buying has been worth more than 25,000 crores so far. So all in all, I think it's going to be a roller coaster session. A lot depends on how what all schemes the finance minister talks about. But as Punita was mentioning, renewables, power, solar energy, defense, railway, infrastructure, these are the sectors to watch out for in today's session.
Right. And also I think some expectations from the budget, we expecting, like startups expecting that there'll be some relaxation in the angel tax provision. Then on employee stock option plans, they're hoping that there'll be some rationalization on the tax, cut at source. And then on buyback distribution tax, if they can avoid the double taxation that currently happens. So these are some of the things that might impact the market.
There is a lot of uncertainty, especially after the CEA talked about higher retail participation in the market, in FNO section. There is a lot of anticipation and little bit of apprehension also in case there would be some kind of tax on FNO trading, or if while the government, I think, is taking on several regulatory measures to kind of weed out the fraud and weed out a lot of speculative aspects out of the trade, but there is anticipation in the markets on how potentially there could be, what could be the impact.
Okay. Coming to the expectations from the manufacturing side, you mentioned the PLI scheme. Any tweaks that you're expecting on the PLI scheme? Because I think some of the expectations was she might do some lower interest rates for drones, defense, tech startups, right, to kind of boost that. She might increase allocation for setting up digital infrastructure. And the semiconductor sector, of course, even the last budget there was a lot of talk about it. So what are you expecting? Any new PLI schemes?
Yeah, I think one is new PLI and the other is reviving the old PLI also equally. Like we are seeing that possibly for semiconductors and even for textiles, we may see another version of PLI that may be floated in. Move from expanding again on the manufacturing side, bolstering manufacturing in India, and also making it more export focused.
Okay.
The other piece on PLI is, I think, the kind of incentives that we've seen all along. They are more sale driven, right? They are more production driven. I think there'll also be some, and at least that's what we hope, some slight tweaking around making it more employment related benefits as well, just to overall have a focus on that area. So I think, and like I mentioned before as well, PLI we are expecting more on the MSME side as well. So industries like toys, textiles, where we have the craftsmanship and where we do have the right skill set as well, we will be seeing PLI investments coming in there. Railway is going to be big, infra is going to be big on that, especially there are news around manufacturing of Vande Bharat, the overall infrastructure around that. I think it's a lot of players for them. We are hoping the benefits will flow in from a PLI standpoint, and electronics definitely, all white goods, LED, and even all our semiconductors, and like I mentioned the other ones, we are hoping that there could be additional PLIs coming in for them as well.
Okay, and I think you also mentioned the focus on green and green financing. All of this is also there. One of the things I think is on electric vehicles. The auto sector has been keenly watching what she will announce for the electric vehicles, because the FAME 2 scheme, the fast adoption and manufacturing of electric vehicles and hybrids, ended on 31st March. And then in the interim, they've had a smaller scheme for the adoption of electric vehicles. But I think what they're expecting is that there would be a stronger focus on two-wheelers, three-wheelers and commercial vehicles in FAME 3, and not exactly for private transport. And there will be subsidies for public transport in this.
I think some amount of rate changes is also what they are hoping for, especially for the hybrids one, because there again the GST, if we talk about it, is a very high level as we compare to the actual EVs that we compare it with. And even within the EV segment, there's a because of the reduced rate of GST, there's a lot of working capital blockage because of the inverted duty structure. So we are hopeful that there's some amount of rate rationalization, as we may say it, or some amount of rate slabs that they may come up with for this sector particularly, just to have a focus there.
And in fact, even the markets are kind of reflecting that sentiment. If you see in a market where the index is down 50 points, some of the few loan stocks that are in the green are the auto stocks, and especially the ones that are into commercial vehicle and two-wheeler that are manufacturing commercial vehicles and two-wheelers. Aisha Motors, M&M, Bajaj Auto, and there seems to be the market is looking forward to some kind of announcement from the finance minister there.
Okay, yeah. So the other thing in the budget that we're looking at is coming back to personal taxation. What are the changes, just to highlight, in the personal taxation that are likely to come about? One is increase in basic exemption from 3 lakhs to 5 lakhs. That's one thing in the new tax. Yes. Yeah. Maybe a change in the capital gains tax structure. There might be some tweaks over there. Okay. Deduction on housing loans, and this is all going to putting more money in our pockets between so deduction on housing loan going from 2 lakhs to 3 lakhs. That's another expectation. And then raising the standard deduction, which was introduced first in 2018 or something, from 50,000 to about a lakh. I mean, there are various estimates. Some are saying they'll raise it to 70,000. Some are saying let's raise it to a lakh. So whatever. I mean, we can see Nirmala Sitharaman right now coming with her red bahikata and getting ready to give the speech in Parliament. We're just about 10-12 minutes away from that. As soon as the Parliament session starts, the Speaker is going to call the House to order, and then I think the first order of business is going to be the Finance Minister's speech. Again, one more thing that we expect on the personal tax front is probably an HRA benefit, the 50% HRA benefit getting extended to more cities, because I think the cost of living and the cost of renting a house in a lot of cities has gone up. You're from Bombay, you would know the rents are phenomenal over there. Right?
Yeah, and not just Bombay. If you see, there has been expectations for a lot of tier 2 cities like Pune, Hyderabad, Indore, cities like that also looking at a higher HRA exemption from the existing 40% that is there for all tier 2 cities. They are kind of looking at something at par with the metros, around 50% exemptions.
I think we are also looking a lot of, there could be some amount of focus on the real and infra side as well, just alluding from here that because a few of the key players in cement and steel industries, they are heavily relying on the government boosting up these sectors and coming up with policies, so that they can further, expand in terms of their own production. I think again on the real estate as well as on the infra side, we are hoping the government would come back in terms of a concrete plan and probably get the cement and the steel players back in action more so.
Yes.
Right. We also have, I think, Mr. Krishan Arora joining us from Grand Thornton Bharat, and we'll just get him on in a minute. Just to highlight some of the things from the interim budget in February, and there she outlined 4 pillars, right, in the interim budget. That was the poor, women, youth, and farmers, and the schemes were all, outlined for these 4 sectors.
Correct.
Do you expect that to continue with the budget, the full budget?
I think the tone would remain the same for sure. We will see the context coming in there in terms of the reforms that the government would be introducing as part of this budget. But I think also there will be a slighter more shift from I would say, the overall economic development standpoint as well. So while these themes would continue, but I think they will still pick up few sectors and few areas where they really want, a certain amount of, I think, benefits and incentives to be really flowing in.
Okay.
Yeah.
Right. So just to outline some of the other things that were announced in the interim budget. She did announce 75,000 crore interest-free loan over 50 years for all the states to kind of develop their infrastructure. And the focus was on infrastructure, 11% in capex for infra and development, which was about 11.1 lakh crores in 24-25. Then the housing scheme, the PM Awas Yojana housing scheme, she said that there will be 2 crore more homes that will be constructed in rural areas under this scheme in the next 5 years. Sorry. And railways, you mentioned railways a little earlier, more Vande Bharat trains. Of course, there was no mention of the bullet train though. That project has been a little late in coming. It's been more than 7 years since it started. But Vande Bharat trains, she said there'll be more, I think 40,000 more coaches would be upgraded to Vande Bharat levels, and those coaches are phenomenal. If you've traveled by Vande Bharat, you would know air-conditioned coaches with sliding doors and all that, which is a far cry away from the older coaches that we've had in the Indian Railways, right? But that said, I'm hoping that there would be some outlay for rail safety, because in the last year or so we've seen some pretty bad rail accidents in India, and the Kavach system that was to be introduced, the coverage is still not wide enough.
In fact, I spoke to Jupiter Wagons just 2 days ago on what they expect are their top expectations, because Jupiter Wagons, if you see, has been one of those star performers in the railway segment in terms of stock performance. So even they, the management there also are very keen on allocations and steps in terms of railway safety and boosting up the coach manufacturing in the country, which is desperately required to bring the other trains at par with the kinds that we have. Vande Bharat.
Of course, there was a push for tourism in the interim budget, where they're going to develop various centers for tourism and upgrade the facilities, much needed. Infrastructure, we're already seeing the outlay for roads and highways, and with Nitin Gadkari back as Minister for Road Transport and Highways, I think there's continuity over there, the number of expressways and highways.
Yeah, and I think in the interim budget also they did mention about 3 economic corridors is what they will be really investing and looking into. So I think hopeful that possibly this budget will have something outlay there as well.
Yes, even for railways also she had mentioned it for energy, cement, minerals, high traffic corridors for direct port connectivity.
Correct.
That we would
the
have.
other section that has been also a big beneficiary of the Made in India boost is, of course, the defense sector, from indigenizing a lot of strategic armory that is used by the defense. There's also a big boost for indigenizing our what we kind of reducing our imports from Russia and other key markets. So there, that's also a reason why you have seen in the last couple of weeks and months, defense stocks have been also on a huge rally. There have been huge order wins they have been getting. Companies like Mazagaon Dock and Garden Ridge Shipyard, they have been on the radar for a while now.
Yeah, and from a tax rate rationalization also, I think some of these sectors would be pick up, and we'll see some customs duty tariffs being hiked up, so that again the impetus comes on imports and sub-assemblies and doing some bit of manufacturing in India specifically for these sectors.
Okay. Of course, green energy, as you mentioned, that was there in the interim budget as well. Setting up of coal gasification and liquefaction capacity of 100 metric tons by 2030, and then blending biogas into natural gas. Like they're doing ethanol with petrol, they're going to do biogas with natural gas. So in India, we have plenty of scope for that.
Yes.
So that's one of the things that she had talked
Yeah,
about.
and I think another area to look specifically on, on natural gas is its inclusion within GST. I think we've talked about it. There's been a huge lobbying around it, even electricity for that matter. So I think specifically on natural gas, because where the RNR remains the same, whether it's within the erstwhile indirect tax regime or whether it moves to GST, I think that's going to be one of the initial players that will see the day of light within GST. So I think that's one piece to look in how it really impact the consumers, and how the overall framework would go around this, followed by electricity is what we believe may get into GST over a period of time. So
Yes,
we
I
can
mean,
see some propositions around
That's been a long-standing demand to have
absolutely.
fuel and gas
Yes.
under GST. But I think that's a money spinner for the government, and especially since it's a state government
It's a
subject.
state,
Yes.
right.
So
Yes.
they don't want to let go of that,
Yeah.
cash
Yeah,
cow.
and a good 35% of the component belongs to the state government.
So liquor and fuels.
Yes.
These are two things that state
Yes.
governments want to hang on to.
Correct.
So maybe we'll see some change, like you said, at least in natural gas, which
Yeah,
could
that
be.
should be the earlier player.
Yeah.
If we talk about more inclusion from a GST standpoint.
Yes. And then, of course, there was the rooftop the solar scheme,
Yeah.
where 300 units of free power every month to those households that get connected to the grid
Yes.
from the rooftop solar scheme. That is something that will probably we might see extending. There was already a rationalization in GST on solar panels and components for solar panels in the last budget.
Yeah.
There might be further rationalization now.
Yeah.
To kind of promote domestic manufacturing for.
And there seems to be a lot of positive expectation on that front. If you see the way the solar stocks have also run up in the last 3 to 4 months, there has been a huge anticipation and expectation that the governments will kind of extend on the current SOPs that is already there in the system, and it kind of aligns with the government's COP26 declaration also.
Yeah, just that I think on the green hydrogen side, I think there's still a very strong push from the industry players to have still focus on solar, which is the backbone for green hydrogen.
Right.
Yes.
And to incentivize that from an overall ecosystem standpoint. So while right measures have been put in to boost Make in India, but to also be mindful of the capacities that we have in the country currently, and with, of course, the parallel goal of enhancing green hydrogen as another alternative fuel, I think the government still need to focus how to really balance the entire ecosystem and still see how they can have that balance between import and the domestic production there. So I think some few dispensations specific to that sector may also we are slightly hopeful they may be looked in by the government.
Yes.
Right, and then of course the allotments under the major schemes. Just to give you some numbers, we're just a couple of minutes away from the Parliament speech. I believe the Finance Minister has reached Parliament and getting ready. Then Parliament will begin in a couple of minutes. So just quickly before that, I think in the interim budget she had outlined 86,000 crores for the rural job scheme, which was MGN regs, 43% higher than the previous budget estimate. And then the Pradhan Mantri Awas Yojana, as I was talking about earlier, the housing scheme, 80,671 crores was allotted for that, up 49% from the previous year's revised estimate. Then of course for water, Jal Jeevan Mission, 70,163 crores. Hopefully this year seeing better than expected monsoon in most parts of the country, save for the eastern part. Agriculture will anyway bounce back this year. Then the PM Kisan scheme, again benefiting farmers. I think 60,000 crore outlay there was for FY25. Any new incentives or tweaks you're expecting in these sectors?
I think maybe some interplay around the technology side that we may see just to boosting the sector further. Possibly some outlays around making this more tech sensitive and introducing it more from an efficiency standpoint is what we are hoping for.
Okay, I think it's now time for the big event, the speech by the Finance Minister. She is in Parliament, and I think we should all now hang on to every word she says, and we'll be back right after her speech to analyze what she said and see what's in store for us. So let's head over to Parliament right now.
ये की बात है कि डॉक्टर एक्शन बजट सत्र को देखने के लिए यहाँ उपस्थित है। माननीय डॉक्टर तुल्या एक्शन शुक्रवार दिनांक 19 जुलाई 2024 को भारत पहुँची। उन्होंने 21 जुलाई 2024 को आगरा का भ्रमण किया और इस समय वह विशेष बॉक्स में आसीन है। हम भारत में उनके सुखद और सफल प्रवास की कामना करते हैं। हम अंतर संसदीय संघ के प्रेसिडेंट के रूप में उनकी भूमिका के लिए सफलता की भी कामना करते हैं। उनके माध्यम से हम तंजानिया गणराज्य की संसद के सदस्यों, तंजानिया की सरकार तथा वहाँ की मित्र जनता को बधाई और शुभकामनाएं देते हैं। मान्य सदस्यगण, जैसा कि आपको समाचार भाग 2 के माध्यम से पहले ही सूचित किया जा चुका है कि माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां हार्ड कॉपी के रूप में उपलब्ध कराई जाएगी। अतः बजट प्रस्तुत हो जाने के पश्चात माननीय सदस्य कृपया बजट भाषण की अपनी अपनी प्रति प्रकाशन काउंटर से प्राप्त कर लें। आपको ये भी सूचित किया जाता है कि माननीय मंत्री द्वारा बजट प्रस्तुत किए जाने के पश्चात बजट की प्रतियां आपको मेंबर्स पोर्टल के माध्यम से भी उपलब्ध करा दी जाएगी। माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण।
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic third term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age, make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I am happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework, about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Vikasit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oil seeds. For achieving self-sufficiency in pulses and oil seeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oil seeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing, and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly, and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Participation of women in the workforce. We will facilitate higher participation of women in the workforce through setting up of working women hostels in collaboration with industry and establishing creches. In addition, the partnership will seek to organize women-specific skilling programs and promotion of market access for women SHG enterprises. Skilling program. I'm happy to announce a new centrally sponsored scheme as the fourth scheme under the Prime Minister's package for skilling in collaboration with state governments and industry. 20 lakh youth will be skilled over a 5-year period. $1,000 industrial training institutes will be upgraded in hub and spoke arrangements with outcome orientation. Course content and design will be aligned to the skill needs of industry, and new courses will be introduced for emerging needs. Skilling loans. The model skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans. For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. Priority 3, inclusive human resource development and social justice, saturation approach. Our government is committed to all-round, all-pervasive and all-inclusive development of people, particularly farmers, youth, women, and the poor. For achieving social justice comprehensively, the saturation approach of covering all eligible people through various programs, including those for education and health, will be adopted to empower them by improving their capabilities. Implementation of schemes meant for supporting economic activities by craftsmen, artisans, self-help groups, scheduled caste, scheduled tribe, and women entrepreneurs and street vendors such as the PM Vishwakarma, PM Swanidhi, National Livelihood Missions, and Stand Up India will be stepped up. Purvodaya. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha, and Andhra Pradesh. This will cover human resource development, infrastructure, and generation of economic opportunities to make the region an engine to attain Vikasit Bharat. On the Amritsar-Kolkata Industrial Corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be a good model for developing our ancient centers of cultural importance into future centers of modern economy. This model shall showcase Vikas Bhi, Virasat Bhi, in our growth trajectory. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai industrial corridor and Varavakal node on the Hyderabad-Bangalore industrial corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. Women-led development. For promoting women-led development, the budget carries an allocation of more than 3 lakh crore for schemes benefiting women and girls. This signals our government's commitment for enhancing women's role in economic development. Pradhan Mantri Janjatiya Unnat Gram Abhiyan. For improving the socio-economic condition of tribal communities, we will launch the Pradhan Mantri Janjatiya Unnat Gram Abhiyan by adopting saturation coverage for tribal families in tribal majority villages and aspirational districts. This will cover 63,000 villages, benefiting 5 crore tribal people. Bank branches in northeastern region. More than 100 branches of India Post Payment Bank will be set up in the northeast region to expand the banking services. This year, I have made a provision of 2.66 lakh crore rupees for rural development, including rural infrastructure. Priority 4, manufacturing and services, support for promotion of MSMEs. This budget provides special attention to MSMEs and manufacturing, particularly labor-intensive manufacturing. We have formulated a package covering financing, regulatory changes, and technology support for MSMEs to help them grow and also compete globally, as mentioned in the interim budget. I am happy to announce the following specific measures. Credit guarantee scheme for MSMEs in the manufacturing sector. For facilitating term loans to MSMEs for purchase of machinery and equipment without collateral or third-party guarantee, a credit guarantee scheme will be introduced. The scheme will operate on pooling of credit risks of such MSMEs. A separately constituted self-financing guarantee fund will provide to each applicant guarantee cover up to 100 crore rupees, while the loan amount may be larger. The borrower will have to provide an upfront guarantee fee and an annual guarantee fee on the reducing loan balance. New assessment model for MSME credit. Public sector banks will build their own in-house capability to assess MSMEs for credit instead of relying on external assessment. They will also take a lead in developing or getting developed a new credit assessment model based on the scoring of digital footprints of the MSMEs in the economy. This is expected to be a significant improvement over the traditional assessment of credit eligibility based only on asset or turnover criteria. That will also cover MSMEs without a formal accounting system. Credit support to MSMEs during stress period. I'm happy to announce a new mechanism for facilitating continuation of bank credit to MSMEs during their stress period while being in special mention account, SMA stage, for reasons beyond their control. MSMEs need credit to continue their business and to avoid getting into the NPA stage. Credit availability will be supported through a guarantee from a government-promoted fund. Mudra loans. The limit of Mudra loans will be enhanced to 20 lakh from the current 10 lakh for those entrepreneurs who have availed and successfully repaid previous loans under the Tarun category. Enhanced scope for mandatory onboarding in trades. For facilitating MSMEs to unlock their working capital by converting their trade receivables into cash, I propose to reduce the turnover threshold of buyers for mandatory onboarding on the trades platform from rupees 500 crore to 250 crore rupees. This measure will bring 22 more CPSCs and 7,000 more companies onto the platform. Medium enterprises will also be included in the scope of the suppliers. SIDBI branches in MSME clusters. SIDBI will open new branches to expand its reach to to serve all major MSME clusters within 3 years and provide direct credit to them. With the opening of 24 such branches this year, the service coverage will expand to 168 out of 242 major clusters. MSME units for food irradiation, quality and safety testing. Financial support for setting up of 50 multi-product food irradiation units in the MSME sector will be provided. Setting up of 100 food quality and safety testing labs with NABL accreditation will be facilitated. E-commerce export hubs. To enable MSMEs and traditional artisans to sell their products in international markets, e-commerce export hubs will be set up in public-private partnership mode. These hubs, under a seamless regulatory and logistic framework, will facilitate trade and export-related services under one roof. Measures for promotion of manufacturing and services. Internship in top companies. As the fifth scheme under Prime Minister's package, our government will launch a comprehensive scheme for providing internship opportunities in 500 top companies to 1 crore youth in 5 years. They will gain exposure for 12 months to real-life business environment, varied professions, and employment opportunities. An internship allowance of 5,000 per month, 5,000 rupees per month, along with a one-time assistance of 6,000 rupees will be provided. Companies will be expected to bear the training cost and 10% of their internship cost from their CSR funds. Industrial parks. Our government will facilitate development of investment-ready, plug-and-play industrial parks with complete infrastructure in or near 100 cities in partnership with the states and private sector by better using town planning schemes. 12 industrial parks under the National Industrial Corridor Development Program also will be sanctioned.
Veggie paper, no. Please, Patty.
Rental housing with dormitory type accommodation for industrial workers will be, just 1 minute. Rental housing, I repeat, rental housing with dormitory type accommodation for industrial workers will be facilitated in PPP mode with VGF support and commitment from anchor industries. Shipping industry, ownership, leasing and flagging reforms will be implemented to improve the share of Indian shipping industry and generate more employment. Critical mineral mission. We will set up a critical mineral mission for domestic production, recycling of critical minerals and overseas acquisition of critical mineral assets. Its mandate will include technology development, skilled workforce, extended producer responsibility framework, and a suitable financing mechanism. Offshore mining of minerals. Our government will launch the auction of the first tranche of offshore blocks for mining, building on the exploration already carried out. Digital public infrastructure applications. Turning to the services sector, I propose development of DPI applications at population scale for productivity gains, business opportunities, and innovation by the private sector. These are planned in the areas of credit, e-commerce, education, health, law and justice, logistics, MSME service delivery, and urban governance. Integrated technology platform for IBC ecosystem. An integrated technology platform will be set up for improving the outcomes under the Insolvency Bankruptcy Code for achieving consistency, transparency, timely processing, and better oversight for all stakeholders. Voluntary closure of LLPs. The services of the Center for Processing Accelerated Corporate Exit, CPACE, will be extended for voluntary closure of LLPs to reduce the closure times. National Company Law Tribunals. The IBC has resolved more than 1,000 companies, resulting in direct recovery of 3.3 lakh crore to creditors. 3.3 lakh crore rupees to creditors. In addition, 28,000 cases involving over 10 lakh crore rupees have been disposed of even prior to admission. Appropriate changes to the IBC, reforms and strengthening of the tribunal and appellate tribunals will be initiated to speed up insolvency resolution. Additional tribunals will be established. Out of those, some will be notified to decide cases exclusively under the Companies Act. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5, urban development. Cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Creative redevelopment of cities. For creative brownfield redevelopment of existing cities with a transformative impact, our government will formulate a framework for enabling policies, market-based mechanisms, and regulation. Transit-oriented development. Transit-oriented development plans for 14 large cities with a population above 30 lakh will be formulated, along with an implementation and financing strategy. Urban housing. Under the PM Awas Yojana, Urban 2.0, housing needs of 1 crore urban poor and middle-class families will be addressed with an investment of 10 lakh crore rupees. This will include the central assistance of 2.2 lakh crore rupees in the next 5 years. A provision of interest subsidy to facilitate loans at affordable rates is also envisaged. In addition, enabling policies and regulations for efficient and transparent rental housing markets with enhanced availability will also be put in place. Water supply and sanitation. In partnership with state governments and multilateral development banks, we will promote water supply, sewage treatments, and solid waste management projects and services for 100 large cities through bankable projects. These projects will also envisage use of treated water for irrigation and filling up of tanks in nearby areas. Street markets. Building on the success of PM Swanidhi scheme in transforming the lives of street vendors, our government envisions a scheme to support each year over the next 5 years the development of 100 weekly hearts or street food hubs in select cities. stamp duty. We will encourage states which continue to charge high stamp duty to moderate the rates for all and also consider further lowering duties for properties purchased by women. This reform will be made an essential component of urban development schemes. Priority 6, energy security, energy transition. In the interim budget, I had announced our strategy to sustain high and more resource-efficient economic growth, along with the energy security in terms of availability, accessibility, and affordability. We will bring out a policy document on appropriate energy transition pathways that balances the imperatives of employment, growth, and environmental sustainability. PM Surya Ghar Muft Bijli Yojana. PM Surya Ghar Muft Bijli Yojana. In line with the announcement in the interim budget, PM Surya Ghar Muft Bijli Yojana has been launched to install rooftop solar plants to enable 1 crore households obtain free electricity up to 300 units every month. The scheme has generated remarkable response with more than 1.28 crore registrations and 14 lakh applications, and we will further encourage it. Pumped storage policy. A policy for promoting pumped storage projects will be brought out for electricity storage and facilitating smooth integration of the growing share of renewable energy with its variable and intermittent nature in the overall energy mix. Research and development of small and modular nuclear reactors. Nuclear energy is expected to form a very significant part of the energy mix for Vikasit Bharat. Towards that pursuit, our government will partner with the private sector for 1. Setting up Bharat Small Reactors, 2. Research and development of Bharat Small Modular Reactor, and 3. Research and development of newer technologies for nuclear energy. The R&D funding announced in the interim budget will be made available for this sector also. Advanced ultra supercritical thermal power plants. The development of indigenous technology for advanced ultra supercritical thermal power plants with much higher efficiency has been completed. A joint venture between NTPC and BHEL will set up a full-scale 800 megawatt commercial plant using AUSC technology. The government will provide the required fiscal support. Moving forward, development of indigenous capacity for the production of high-grade steel and other advanced metallurgy materials for these plants will result in strong spin-off benefits for the economy. Roadmap for hard-to-abate industries. A roadmap for moving the hard-to-abate industries from energy efficiency targets to emission targets will be formulated. Appropriate regulations for transition of these industries from the current perform, achieve, and trade mode to Indian carbon market mode will be put in place. Support to traditional micro and small industries. An investment-grade energy audit of traditional micro and small industries in 60 clusters, including brass and ceramic, will be facilitated. Financial support will be provided for shifting them to cleaner forms of energy and implementation of energy efficiency measures. The scheme will be replicated in another 100 clusters in the next phase. Priority 7, infrastructure investment by central government. Significant investment the central government has made over the years in building and improving infrastructure has had a strong multiplier effect on the economy. We will endeavor to maintain strong fiscal support for infrastructure over the next 5 years in conjunction with imperatives of other priorities and fiscal consolidation. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Private investment in infrastructure. Investment in infrastructure by private sector will be promoted through viability gap funding and enabling policies and regulations. A market-based financing framework will be brought out. Pradhan Mantri Gram Sadak Yojana, Phase 4 of the PMGSY will be launched to provide all-weather connectivity to 25,000 rural habitations, which have become eligible in view of their population increase. Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Tourism has always been a part of our civilization. Our efforts in positioning India as a global tourist destination will also create jobs stimulate investments, and unlock economic opportunities for other sectors. In addition to the measures outlined in the interim budget, I propose the following measures. Vishnupad Temple at Gaya and Mahabodhi Temple at Bodh Gaya in Bihar are of immense spiritual significance. Comprehensive development of Vishnupad Temple corridor and Mahabodhi Temple corridor will be supported, modeled on the successful Kashi Vishwanath Temple corridor to transform them into world-class pilgrim and tourist destinations. Rajgir holds immense religious significance for Hindus, Buddhists and Jains. The 20th Tirthankara Muniswarata temple in the Jain temple complex is ancient. The Saptarishi or the 7 hot springs form a warm water Brahmkund that is sacred. A comprehensive development initiative for Rajgir will be undertaken. Our government will support the development of Nalanda as a tourist center, besides reviving Nalanda University to its glorious stature. Odisha's scenic beauty, temples, monuments, craftsmanship, wildlife sanctuaries, natural landscapes, and pristine beaches make it an ultimate tourism destination. Our government will provide assistance for their development to Odisha as well. Priority 8, innovation, research and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Effective implementation of several of these reforms requires collaboration between the center and the states and building consensus as development of the country lies in development of the states. For promoting competitive federalism and incentivizing states for faster implementation of reforms, I propose to earmark a significant part of the 50-year interest-free loan. Working with the states, we will initiate the following reforms. Land-related reforms and actions, both in the rural and urban areas, will cover land administration, will cover 1. Land administration, planning and management, and 2. Urban planning usage and building bylaws. These will be incentivized for completion within the next 3 years through appropriate fiscal support. Rural land-related actions. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhaar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. Labor-related reforms. Services to labor. Our government will facilitate the provision of a wide array of services to labor, including those for employment and skilling. A comprehensive integration of e-Shram portal with other portals will facilitate such one-stop solution. Open architecture databases for the rapidly changing labor market, skill requirements, and available job roles, and a mechanism to connect job aspirants with potential employers and skill providers will be covered in these services. Shram Suvidha and Samadhan portal. Shram Suvidha and Samadhan portal will be revamped to enhance ease of compliance for industry and trade. Capital and entrepreneurship related reforms. Financial sector vision and strategy. For meeting financing needs of the economy, our government will bring out a financial sector vision and strategy document to prepare the sector in terms of size, capacity, and skills. This will set the agenda for the next 5 years and guide the work of the government, regulators, financial institutions, and market participants. Taxonomy for climate finance. We will develop taxonomy for climate finance for enhancing the availability of capital for climate adaptation and mitigation. This will support achievement of the country's climate commitments and green transition. Variable capital company structure. We will seek the required legislative approval for providing an efficient and flexible mode for financing leasing of aircrafts and ships and pooled funds of private equity through a variable company structure. Foreign direct investments and overseas investment. The rules and regulations for foreign direct investment and overseas investments will be simplified to 1. Facilitate foreign direct investments, 2. Nudge prioritization, and 3. Promote opportunities for using Indian rupee as a currency for overseas investment. NPS Vatsalya. NPS Vatsalya, a plan for contribution by parents and guardians for minors, will be started. On attaining the age of majority, the plan can be converted seamlessly into a normal NPS account. Use of technology. We have successfully used technology for improving productivity and bridging inequality in our economy during the past 10 years. Public investment in digital infrastructure and innovations by the private sector have helped in improving access of all citizens, particularly the common people, to market resources, education, health and services. We will step up adoption of technology towards digitalization of the economy. Ease of doing business. For enhancing ease of doing business, we are already working on the Jan Vishwas Bill 2.0. Further, states will be incentivized for implementation of the business reforms, action plans, and digitalization. Data and statistics for improving data governance, collection, processing and management of data and statistics, different sectoral databases, including those established under the Digital India Mission, will be utilized with active use of technology tools. New pension scheme. The committee to review the NPS has made considerable progress in its work. I am happy that the staff side of the National Council of the Joint Consultative Machinery for Central Government Employees has taken a constructive approach. A solution will be evolved which addresses the relevant issues while maintaining fiscal prudence to protect the common citizens. Budget estimates for 24-25. For the year 24-25, total receipts other than borrowings and the total expenditure are estimated at 32.07 lakh crore rupees and 48.21 lakh crore rupees respectively. The net tax receipts are estimated at 25.83 lakh crore rupees. The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year. The government is committed to staying the course. From 2026-27 onwards, our endeavor will be to keep the fiscal deficit each year such that the central government's debt will be on a declining path as percentage of GDP. I will now move to Part B. Indirect taxes. Sir, I start with GST. It has decreased tax incidence on the common man, reduced compliance burden and logistics cost for trade and industry, and enhanced revenues of the central and the state governments. It is a success of vast proportions. To multiply the benefits of GST, we will strive to further simplify and rationalize the tax structure and endeavor to expand it to the remaining sectors. My proposals for customs duties intend to support domestic manufacturing, deepen local value addition, promote export competitiveness, and simplify taxation while keeping the interest of the general public and consumers surmount. In Budget 22-23, we reduced the number of customs duty rates. I propose to undertake a comprehensive review of the rate structure over the next 6 months to rationalize and simplify it for ease of trade, removal of duty inversion, and reduction of disputes. I shall now take up sector-specific customs duty proposals. Medicine and medical equipments. To provide relief to cancer patients, I propose to fully exempt 3 more medicines from customs duties. I also propose changes in the BCD on X-ray tubes and flat panel detectors for use in medical X-ray machines under the phased manufacturing program so as to synchronize them with the domestic capacity addition. Mobile phone and related parts. With a threefold increase in domestic production and almost 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%. Critical minerals. Minerals such as lithium, copper, cobalt, and rare earth elements are critical for sectors like nuclear energy, renewable energy, space, defense, telecommunications, and high-tech electronics. I propose to fully exempt customs duties on 25 critical minerals and reduce BCD on 2 of them. This will provide a major fillip to the processing and refining of such minerals and help secure their availability for these strategic and important sectors. Solar energy. Energy transition is critical in the fight against climate change. To support energy transition, I propose to expand the list of exempted capital goods for use in the manufacture of solar cells and panels in the country. Further, in view of sufficient domestic manufacturing capacity of solar gas, glass, and tinned copper interconnect, I propose not to extend the exemption of custom duties provided to them. Marine products. India's seafood exports in the last financial year touched an all-time high of more than 60,000 crores of rupees. Frozen shrimp accounted for about 2/3 of these exports. To enhance their competitiveness, I propose to reduce BCD on certain broodstock, polychaete worms, shrimp, and fish feed to 5%. I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed. Leather and textile. Similarly, to enhance the competitiveness of exports in the leather and textile sectors, I propose to reduce BCD on real down-filling material from duck or goose. I am also making additions to the list of exempted goods for manufacture of leather and textile garments, footwear, and other leather articles for export. To rectify inversion in duty, I propose to reduce BCD subject to conditions on methylene diphenyl diisocyanate MDI for manufacture of spandex yarn from 7.5 to 5%. Furthermore, the export duty structure on raw hides, skin, and leather is proposed to be simplified and rationalized. Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%. Other metals. Steel and copper are important raw materials. To reduce their cost of production, I propose to remove the BCD on ferronickel and blister copper. I am also continuing with nil BCD on ferrous scrap and nickel cathode and concessional BCD of 2.5% on copper scrap. Electronics. To increase value addition in the domestic electronics industry, I propose to remove the BCD subject to conditions on oxygen-free copper for manufacture of resistors. I also propose to exempt certain parts for manufacture of connectors. Chemicals and petrochemicals. To support existing and new capacities in the pipeline, I propose to increase the BCD on ammonium nitrate from 7.5% to 10%. Plastics. PVC flex banners are non-biodegradable and hazardous for environment and health. To curb their imports, I propose to raise the BCD on them from 10 to 25%. Telecommunication equipment. To incentivize domestic manufacturing, I propose to increase the BCD from 10 to 15% on PCBA of specified telecom equipment. Trade facilitation. To promote domestic aviation and boat and ship MRO, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. I'll read that again. To promote domestic aviation and boat and ship maintenance, repair and operations, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. In the same vein, I propose to extend the time limit for re-import of goods for repairs under warranty from 3 to 5 years. I now move to direct taxes. We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the finance bill by simplifying the tax regime for charities, tedious rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and tedious. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% tedious rate on many payments is being merged into the 2% tedious rate, and the 20% tedious rate on repurchase of units by mutual funds or UTI is being withdrawn. Tedious rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize delay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending in appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise, and service tax in the tax tribunals, high courts, and Supreme Court to 60 lakh rupees, 2 crore rupees, and 5 crore respectively. With a view to reduce litigation and provide certainty in international taxation, we will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing a simpler tax regime for foreign shipping companies operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals: to improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the Benami Transaction Prohibition Act 1988. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
Item number 2. Item number 2.
Sir, with your permission, I rise to lay on the table the following statements under Section 3 of the Fiscal Responsibility and Budget Management, FRBM Act 2003 medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 3.
Sir, with your permission, I rise to move for leave to introduce the Finance Number 2 Bill 2024.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें। मेरे विचार में निर्णय हाँ वालों के पक्ष में अनुमति प्रदान की जाती है। माननीय मंत्री जी, अब विधेयक पुनर्स्थापित करें।
Sir, I introduce the bill.
आइटम नंबर 4.
The Union Territory of Jammu and Kashmir budget. Sir, I rise to present a statement, Hindi and English versions, of the estimated receipts and expenditure of the Union Territory of Jammu Kashmir for the year 24-25.
सभा की कार्रवाई कल बुधवार दिनांक 24 जुलाई 2024 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
Has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai industrial corridor and Varavakal node on the Hyderabad-Bengaluru industrial corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. We'll speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework, about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Vikasit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oil seeds. For achieving self-sufficiency in pulses and oil seeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oil seeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing, and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly, and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Participation of women in the workforce. We will facilitate higher participation of women in the workforce through setting up of working women hostels in collaboration with industry and establishing creches. In addition, the partnership will seek to organize women-specific skilling programs and promotion of market access for women SHG enterprises. Skilling program. I'm happy to announce a new centrally sponsored scheme as the fourth scheme under the Prime Minister's package for skilling in collaboration with state governments and industry. 20 lakh youth will be skilled over a 5-year period. (1,000 industrial training institutes will be upgraded in hub and spoke arrangements with outcome orientation. Course content and design will be aligned to the skill needs of industry, and new courses will be introduced for emerging needs. Skilling loans. The model skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans. For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. Priority 3, inclusive human resource development and social justice, saturation approach. Our government is committed to all-round, all-pervasive and all-inclusive development of people, particularly farmers, youth, women, and the poor. For achieving social justice comprehensively, the saturation approach of covering all eligible people through various programs, including those for education and health, will be adopted to empower them by improving their capabilities. Implementation of schemes meant for supporting economic activities by craftsmen, artisans, self-help groups, scheduled caste, scheduled tribe, and women entrepreneurs and street vendors such as the PM Vishwakarma, PM Swanidhi, National Livelihood Missions, and Stand Up India will be stepped up. Purvodaya. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha, and Andhra Pradesh. This will cover human resource development, infrastructure, and generation of economic opportunities to make the region an engine to attain Vikasit Bharat. On the Amritsar-Kolkata Industrial Corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be.
Welcome back to this continued coverage of the Union Budget 2024 on Indian Express and Financial Express. What a budget speech this has been. I have with me two new guests in the studio, both from Deloitte. Mr. Divya Baveja, who is an expert, and his partner Deloitte on personal tax, and of course Kushal Kumar Singh, a partner Deloitte India, who will be talking about infrastructure. Personal tax, I think that is where the focus is going to be for you and me, for the salaried professionals. There's a lot in this budget, and we had expected a lot of this. We had spoken about it just before going into the budget speech. But yes, she did deliver on that front. Net, what, 17,500 rupees more I get to spend, so that's a few good dinners out, I guess. Revision in the tax structure. Was this expected, if I was to ask you?
Yes, I think the focus of the government in the past has also been how to promote simplified regime, or the new regime as they call it. And it was expected that there would be some changes which will benefit the taxpayers. So I think it is in line with the expectation. The only thing was that 30%, the expectation that 30 may come down to 25, but I think that's a small part. But there have been some change in the slabs which are beneficial, you rightly said, and there's a saving of 17,500.
Right. So just to give you that change in the slab, I think she said 0 to 3 lakh rupees continues to be nil in the new tax structure. 3 to 7 lakhs, 5%, 7 to 10 lakhs, 10%. 10 to 12 at 15%, 12 to 15 lakhs at 20%, and 15 lakhs plus at 30%. So now anybody, the tax incidence reduces for almost all slabs, and up to about 8 lakh rupees, I think now with all the standard deduction, you don't have any tax. Is that right?
See, the standard deduction is 75,000, which goes up.
Yeah.
So when I look at the tax rates and slabs, I will have to see where do I really get the benefit, because there is only standard deduction which is allowed now.
Okay. So in the new tax regime, only that.
That's standard deduction, and there is also for NPS, which is there. So
right.
That's the
for
other part
pensioners,
which
yes.
is there. Yeah.
For pensioners, for family pension for pensioners, the deduction has gone up from 15,000 to 25,000.
Yes.
So that's.
And also the NPS deduction is available under the new regime also.
Right.
So that is where there's the increase in the limit as well.
Okay, so net she said about 4 crore salaried professionals and individuals and pensioners would be impacted by this benefit.
Yeah.
So that I think is quite a substantial saving, more money in the hands of the consumer. So this is like we had predicted earlier, to boost consumption. On one side, you can incentivize companies and give them tax cuts, but here more money in the hands of the consumers boosts consumption. So
yes, absolutely, yeah.
Okay.
So that is something which has been one of the agenda points, that how do we boost consumption in the hands. So that is one way to do that, yeah.
Okay, but I have to ask you this one thing. What happens to those of us who are in the old tax regime? I mean, we have these long-standing insurance policies and tax-saving instruments that we've been, and housing loans and everything included for over so many years. What happens to the old tax structure?
So that continues. There's no change in that. That's what we could understand from the scheme, from the budget speech.
Yeah.
So that still continues. So an individual will really have to see what all investments they have made or commitments they have, and then compare the old regime with the new regime and go by whatever is beneficial to them.
Right.
The only thing one needs to bear in mind is that, for the withholding tax purposes by the employer, the new regime is the default regime. So that most likely continues, because there is no such mention in the speech. So
right.
One would really need to see if you have substantial investments, home loan and other payouts to be done, then one will have to compare the new regime and the old regime and see which one is more beneficial. Yeah.
Okay. She did mention that I think more than 2/3 of the taxpayer base has now moved to the new personal income tax.
Yes, that's
regime.
what the focus of the government had. That's what she said in the speech also. And if you see over the last 2 years, the government has simplified and made changes to the new regime to make it more attractive.
Right. And even on the corporate taxes, also 58% of corporate taxes came from the simplified regime, she said. There were also a couple of things for the charities, merging them into one rate from the 5% TDS rate and the 20% TDS rate that is being withdrawn. A couple of other things. This is on direct taxes, so I'm just going to run through it for the benefit of our viewers. A good thing is, of course, decriminalizing the delay in payment of TDS, because I think that was a big bugbear
yes, absolutely,
for a lot of companies.
And also when she talked about the Black Money Act,
yes,
when there was disclosure of people, generally, one doesn't want to really not disclose, but if something inadvertently happens, if there are certain misses, whether it's stock options or overseas security plans and all, then I think it's decriminalized under the Black Money Act, which was not there earlier. So that's also a good move, for people who inadvertently would miss out in disclosing some of those specified assets which she talked about.
Right. And of course, there's a simplified reassessment of tax now. You can reopen it. It can be reopened beyond 3 years only if the income is more than 50 lakhs. If the escaped income is more than 50 lakhs. So that way, I think a lot of people will be heaving a sigh of relief now if you've not been keeping your taxes intact. Because right now, I think the whole thing of a tax raid is used as a weapon against a lot of companies. Even if they've had a 10-year-old long-standing tax dispute, they're being reassessed. But I think now that will go away.
Right, and also see, these are all steps in the direction to see how you can simplify the tax laws. And also, how do you reduce the burden of litigation, which is what, when she started the speech, the Honorable Finance Minister, she did talk about the new tax regime not the regime, but the new tax laws or scheme that she wants to look at. How do you rationalize the law? So these are the steps in those directions.
Okay. So just to reiterate what she said in the budget, there were 9 priority areas that the budget is looking at this time. Starting with, for India to become Viksit Bharat by 2047, she had outlined 9 priority areas. It's productivity, employment and skill, human resources, manufacturing services, urban development, energy security, infrastructure, innovation, and next-gen reforms, right? So all of that, a lot of it, there was a huge amount of focus on MSMEs as well, where there's a lot of labor-intensive manufacturing, support for MSMEs, credit guarantee scheme for MSME is being given by pooling of risks. There's a 100 crore guarantee on a loan amount, even if the loan amount is larger. So all of this will benefit MSMEs. And then if there's a scheme to provide internship in companies. Now, one of the things that this government had difficulty with, I would say, when we had the general election, was on employment and job creation. I think this budget kind of gives a little bit of a fillip in that direction by launching a scheme to provide internship in 500 companies for 1 crore youth in 5 years. This will give them 1 whole year of real life corporate experience, 5,000 rupees per month, and a one-time assistance of 6,000 rupees to be provided. Of course, a lot of this will come out from the CSR fund from companies. So that's something that will help you at least get a flavor of what a real job is like, and maybe there might be some talented interns who could be absorbed into the company. That's something that's beneficial. But I think the stock markets aren't too happy because the STT has come back from 0.02%. She has increased it to 0.1% on FNO. And I think that is having an impact on the stock markets right now because the markets are down.
Even the capital gains rate has gone up.
Yes, the capital gains rate.
For specified foreign financial assets, it has gone up,
Correct. So I think that part of it, the markets are not too happy with. But I guess on the personal tax front, litigation, disposing of backlog, I think all of that will benefit.
Definitely, it's a good move and a beneficial move. Another thing that you rightly said, when we read the economic survey, it also focused on job creation, on skilling, and that is what the budget is also focusing on. I think when you look at on an overall basis, it's not only the tax, but also what policies government really wants to implement, so that helps the general youth or general people. That is something which is what one should look at on a holistic basis. Right. So that way, these are the steps in the right direction, what they really want to do. from whether it's employment, whether it's skilling, making,
Right.
or whether it's on the tax side, how do you help, from the taxpayer's perspective, yeah.
Okay, so let's shift gears and come into infrastructure now. Infrastructure investment priority 7 as she outlined in the budget. 11,111 crore rupees is what she outlined, capex. This is 3.4% of GDP infrastructure investment. She had already mentioned this, I think, in the interim budget well. So that continues. A whole bunch of new roads to be implemented, especially in Bihar. Funds for repair of bridges, building new bridges, funds for flood control, building of structures to prevent floods in Bihar. I think all of this she outlined. So what do you see the announcements on infrastructure like?
So if we compare the announcement with the interim budget, compared to the last year, there has been a significant increase, and that has been continued. While the market was expecting certain further increase, especially because of the backdrop where RBI gave a windfall dividend to the government, there was an expectation that this money will be utilized to further do capital expenditure. That has not happened. While there have been a lot of projects, especially in the eastern part of the country, that have been announced, but there have also been announcements that money will be brought in by the multilateral financial institutions.
Okay.
Now, while the devil lies in the detail, we'll have to see whether these additional projects, the capex for that is included in the 11.11 lakh crores or not.
Right.
Because these projects were not there in the interim budget, but the amount remains the same. So we'll have to see what project has gone in and what project has gone out, and whether the projects that are being developed through the MFI assistance are getting involved here or not.
Okay.
So we'll have to look at those details. But yes, the announcements are very good, especially the focus on logistics cost reduction. She has talked about 100 industrial logistic parks. She has talked about industrial parks to be developed, 12 additional ones. So again, more focus on production. Also, the focus on solid waste and sewerage management in 100 cities is something that has been talk of the town, is a very important necessity for the country. So all in all, the focus has been positive. The vision for the next 5 years, if we look at what has been spoken today, the vision is absolutely clear. There are no ifs and buts on the vision. The government has accepted very clearly that the economic multiplier for capital expenditure is way high compared to the economic multiplier for revenue expenditure.
Okay.
Past studies says that for revenue expenditure, the economic multiplier is 1 or 1.1, wherein for capex, it sometimes goes up to 3.5.
Right.
So there has been a thrust on capital expenditure, and which is clearly evident from the budget speech that Madam has made.
Okay. Although not directly related to infra, I mean, energy security is something else that she spoke about.
Yes.
And the rooftop solar project, which she had already announced in the interim budget, that has continued. She did give some figures of the number of people who have actually signed up for it. 1.28 crore registration so far for the scheme, the rooftop solar scheme, where they get 300 units of free electricity by setting up these panels on their rooftop. And there are about 14 lakh applications waiting, which they are going to review. Yes. And I think she also, tying in with that, she has reduced customs duties on certain solar panel components.
Yes.
Which will also be beneficial there.
True. And there is a huge demand. We have not even in tier 1, tier 2 cities, even in tier 3, tier 4 cities.
Right.
The demand is huge. In fact, the demand in tier 3, tier 4 cities is much more than tier 1, tier 2 cities for this scheme. Reason being, the reliability of the electrical grid is much better in the metro cities compared to the smaller cities. So there is a huge demand there.
Right.
So again, as I said, the vision is quite clear and the loops are being tied out so that we move at a very fast pace for future.
And it's interesting that she did mention the setting up of Bharat small reactors, nuclear reactors. So
yes.
While we are looking at solar power, wind power, we are also looking at nuclear power as part of our Viksit Bharat vision, and for which she had spoken about setting up Bharat small reactors, R&D for Bharat small modular reactors, setting up a fund for that, and then higher efficiency thermal power plants, which she outlined as advanced ultra supercritical thermal power plants, because she emphasized that word. I'm just bringing that up again. NTPC and BHL are going to have a joint venture for a 800 megawatt commercial plant to be set up. So all of this, I think, contributes to.
No, in fact, the one thing that stands out is the nuclear R&D plants
Yes.
or reactors. One of the key utilization of those R&D reactors is to produce nuclear medicine. Today, India almost imports 100% of nuclear medicine, which
Right.
is utilized in cancer and many other things. And I'm aware that if we have an in-house or a in-country nuclear reactor that can produce nuclear medicine, the cost for treatment can go down significantly.
Right, right. Okay. So just a couple of other areas which I just wanted to highlight was again the urban housing scheme, 10 lakh crore investment in the PM Awas Yojana. Central assistance of 2.2 lakh crores will come in the next 5 years. There'll be enabling policies that will be set up for transparent rental housing, because I think we were expecting something on the HRA front as well, right, in personal tax, but that didn't happen.
No, nothing much on HRA. I think the only thing we were looking at was that maybe include Bangalore as one of the cities, because currently when we look at metro, they define Delhi, Mumbai and Chennai.
Right.
And Bangalore was one which we were hoping to get added, yeah.
Okay. Just summing up a couple of more things, and then we will have a couple of more guests
Sure.
joining us. And I think you'll just need to be slightly louder when you speak, because the audio is not going on. Right. So a couple of other things that she spoke about was setting up of the Amritsar-Kolkata industrial corridor, industrial road at Gaya. So roads, highways, particular to Bihar, any reason why these states were in focus?
I'll not hazard a guess. I think it's a common knowledge. But yes, I'll not say these two states have been picked up. What has been picked up is the eastern region of the country. And I think projects have been announced in all the states that are getting covered here. Amritsar-Kolkata corridor is already in operations.
Right.
And there was a long-standing demand for an industrial node in Bihar. And what better place than Gaya? There were outstanding demands, there are outstanding requirements for it, and therefore whatever has been announced, like for example the flood control measures, is something that we read in the monsoon season every year, and a normal person will always think of, can't we do anything around controlling the floods? Someone had to bite the bullet. She has bitten the bullet this year.
Especially since we just had 11 bridges in the last
year.
1 month collapsing in Bihar.
Yeah. So I don't think any state has been picked up. There are requirements, there are government's commitments, like for Andhra Pradesh, the Andhra Pradesh Reorganization Act had given certain responsibilities to the central government. Most of the things that were announced, in fact, her statement was that as per that Reorganization Act, this is what we are going to do. So they are just moving ahead on their responsibilities under the Act.
Okay. And Andhra Pradesh, of course, no prizes for guessing why so much of emphasis on Andhra Pradesh. But I guess that state finally gets its day in the sun, because it's been asking for the capital.
At least now we have a clarity which place the capital of Andhra Pradesh would be.
Right.
Because last 5 years we always thought there are 3 capitals.
Yeah.
And so therefore which place to develop was a question mark. But at least now there is a clarity, there is a place. Lot of development happened in the previous regime. So I think the continuation will happen.
Right. Then 2.66 lakh crore rupees was an outlay for rural development and infrastructure there.
Yeah.
I did cover the support for MSMEs, that was one. Education, I think, skilling in education, that's something she spoke about, and that was something that the economic survey also had pointed out, where there is a skill gap. Only about 51.3% of our youth is currently employable in the current scheme of things. And IT companies, especially in the IT sector, there was a 63% dearth of talent, for the IT in the IT sector. So under the scheme, there'll be about 20 lakh youth that will be skilled in a 5-year period. There'll be about 1,000 industrial training institutes in a hub and spoke arrangement, and new courses. Skilling loans will be facilitated, about 7.5 lakh rupees with a guarantee from the government fund students can get. About 25,000 students will benefit from this loan scheme and the skilling program. The other thing, I mean, like she had outlined, the 4 pillars: women, poor, farmers, and youth. For women, again, participation of women in the workforce, setting up of women, working women hostels in collaboration with industry, setting up of creches. All of this will help boost more women coming into the workforce. I think that was another part of the 9 schemes that 9 priority areas that she had outlined over there. Could she have done more in this side? I mean, if I have to, at least on the taxation front or something, any kind of differentiation could have been brought in?
No, I think from a tax perspective, the government is moving in that direction which they wanted to on the new regime, and looking at the fiscal deficit, I think that is where this was the step that was expected. As I said, 25% could have been there, but again, looking at the fiscal deficit, maybe this was not the right time to do that.
Yeah.
And maybe they may look at it in the next budget as things improve on that. Because the target is that how do I really reduce the fiscal deficit, which will really help in, bringing up more rationalization in tax rates.
So fiscal deficit at 4.9% of GDP, bringing it down to 4.5% and then reducing from 26, 27 onwards.
Yeah.
I think that is a pretty positive outlook for the country. It puts us on the fast track to growth. We are the fastest growing economy, and probably we'll get to that number 3 spot that we've been eyeing for a long time. With just a few lakh crores behind Germany and UK right now.
True.
We can get there. Of course, the other thing was the focus on farmers. One of the pillars that she had outlined. So, transforming agriculture research for farmers. Comprehensive review of agricultural research is going to be undertaken. 109 new varieties of crops of 32 field and horticultural crops to be released for cultivation by farmers. This will benefit about 1 crore farmers in the next 2 years, and they'll be initiated into natural farming. And I think that's pretty important given the way our food prices also have been fluctuating, and the government also has to, MSP is there, they have to bear a certain load on MSP. So by doing this, they are kind of hedging their risks, I guess.
True. Along with that, there was a very minor mention that to look at food security, the government will also focus on creating cold storages.
Yeah.
That actually has a very significant impact on the fluctuations of food prices.
Okay.
So that is something that has been the requirement, and while again the details are not aware, but the focus is cold storage capacity. That's a huge step.
Right. So a lot of this will come out in the fine print of the budget. That's something that will come out in the next few minutes or so. I'm just getting a little bit of feedback over here. Could you repeat that? Okay. We have somebody online as well joining us. Right. Okay, we have Krishan Arora from Grant Thornton joining us online. Can I hear him? And I can't hear him right now. I'm just going to try and get him in. Okay, I think we have an audio glitch. We'll try and get him back on. I think technology still we really need to get up there. So anyway, so the whole focus has been on Atmanirbharta on these 4 pillars. So no surprises from the interim budget to now, if I was to ask you.
No, I think this is what the government was looking at. How do I really, take forward the direction that they had laid out at the time of the interim budget?
Yeah.
And I think the steps are in that direction on how do you really make it a Viksit Bharat by 2047. And I think these are the steps in that direction, whether you look at employment, skilling, women, youth, or agriculture, farmer, infrastructure. I think these are the policy announcements which are there are the steps in that direction. For example, when you look at, the focus on the first-time workers, how do you really incentivize the industry and having more first-time workers to bring more youth into the employment, which emanates even from the economic survey and including the 9-point agenda which they have laid out. So I think these are the steps in the direction which they had laid earlier in the interim budget on Viksit Bharat by 2047 and how they are moving in that direction. Yeah.
Okay. There was no specific mention on the railways and aviation side in this budget so far. Were you expecting more?
So there has been a lot of announcements in the run-up to the budget. If you look at last 5 months, there have been a lot of announcements on railways, a lot of announcements on aviation. So yes, the expectation was that the chances of a new announcement in the budget would be on a lower side, which has continued. But I think announcement was made for Bihar that new airports would be developed. Yeah. There are already 4 or 5 places that have been identified. What we expected was something on Udan scheme. That was introduced with a lot of focus, and then slowly and gradually the budgets have been coming down for that. And the expectation was this budget may give some more impetus to that, but at least it was not announced in the speech. We don't know, if there is anything in the details of the budget document. But on the aviation side, that was one announcement that people were expecting. Okay. On the railway side, I think the policy documentation has been quite clean. More passenger amenities, better railway stations, monetization of railway assets. These has been the policy statements that have been made over the past 6 months to 9 months. And since nothing adverse has been announced, we expect the same to continue, which is the demand of the industry also.
Right. But I was expecting there would be some announcement, given that we've had a pretty bad year for railways and even in terms of airport infrastructure. We've had a few airports where the canopies have collapsed, and railways we had a few bad train accidents. So the coverage system, she has mentioned it in the previous budget, but she made no mention of it this time.
Actually, in the previous budget, 2022-23, there was a roadmap announced for implementing it in next 4 years, and that continues. So that probably the reason why she hasn't announced it here is that roadmap is already in place. So it could have been announced, but the roadmap is already there. Unless and until there is a change in the roadmap, government may not announce it. So that is there. But yes, railways has had a bad year. Something could have been announced just to keep things in order.
Right. Okay. I think we have Krishan Arora back. Can we get him on? Krishan, can you hear me?
Yes. Am I audible?
Finally, yes, you are audible.
Yes.
Right. Krishan, a lot of announcements on the indirect tax front as well. What do you make of it?
So I think couple of things. In the 9-point theme of the budget, while the FM spoke more on the economic reforms and the policy rationalization measures on giving impetus to FDI promotion, skill development schemes, etc., to generate more employment opportunities. What I could kind of gather from there, specifically on skill development, is that creating those incentives for enhancing skill development and job creation also is an additional forward-looking step, different from what typically a PLI incentive would be. And this will only complement the Make in India initiative of the government by adding more skill on one side and encouraging Indian manufacturers to actually employ people so that they can claim excellent benefits on the skill development side as well, over and above the Make in India plus the PLI. I think that was one of the positive steps which I saw. I was looking forward to certain specific announcements on the PLI enhancement and additional sectors, which was which was something like toys, textiles, apparel, etc., commercial aircraft. These are all sectors which were already identified, and also to extend the additional benefit to renewable and green energy, mobile phones, etc. No announcement actually came on that front, but I'm hoping that is something which the government will come back with, because that is something which is already on the cards. But having said that, it would have been a boost to these sectors to kind of have that announcement as part of the budget speech, I would say.
But she did touch upon GST though.
Yes,
that,
so I was
and custom duty as well. Yeah.
Right. So I'll pick up the custom duty reforms. I think it's an ongoing exercise, and we know that in the WTO commitments and managing to kind of align our custom duty rate structures globally is not an easy task. So again, in addition to that, to encourage domestic manufacturing, local value addition, to boost exports, etc. The custom duty rates are typically touched upon in terms of reducing the rates wherever there is a need for increasing the consumption, or for anything which is scarcely available, like inputs for manufacturing something which is actually going to create demand. So you could see those changes on rationalization from metals, mobile parts, minerals, etc., where reduction of duty rates happened, like in mobile chargers, also in the in gold, silver, platinum, etc., to improve consumption in domestic consumption. Those things happened. But also wherever we saw the increase of basic custom duty rates, like for telecom instruments, PVC, etc., ammonium nitrate, these are all done to actually discourage imports of these, so that domestic manufacturing can level playing field can be given. Aviation sector also saw some benefits in terms of increasing the period for MRO activities for ship, boat, aviation, all of those, from an export of goods which are meant for repairs from 6 months to 1 year. Also, similarly, which goods which are being imported and re-exported, similar benefits were announced. I think one of the other things which I saw, which was a favorable one, was for the pharma sector to give exemption for medicines from custom duty for cancer patient. I think that is something which is also imperative.
3 more medicines.
Increase in that, increase in the cancer patient fraternity as well. So I think these are a couple of things which were there on the custom duty side, which I kind of noted. GST, I think in the theme, how GST is actually prevailed in the last 7 years, the success of that in terms of eliminating tax evasion measures, etc. I think the more thematic part which I heard from the finance minister was to look at further rationalization measures, and also including sectors, extending it to other sectors. I think that was an important statement. I was hoping that there will be specific discussion on rate rationalization of GST, as well as on the extension to petroleum products, which has been a long pending demand. But specifically
that was not mentioned at all. Yeah.
Statement clearly envisaged that is on the cards. So one could really expect that the committee which has been formed for the GST rate rationalization will come with some findings to probably shrink it down to 3 rate structure, which is what is probably expected under GST, and also look at sectors like petroleum products, which is very, very long pending demand, to get it back into the GST, which was already included but has not been activated. On the other side,
the other thing we expected, GST, besides petroleum products bring into GST, that's been a long-standing demand. But we thought there might be rationalization for electric vehicles. There was no mention about electric vehicles or electric mobility.
Mentioned, I think we'll have to read the fine print. Some of more changes which have come, but it would have been a critical one to kind of be announced as part of the budget. So it wasn't there. So I think one would really need to look at the fine print, but I did not hear anything specifically on that.
Okay. And but I think indirectly there is a connection because she had brought down the an exempted custom duty on lithium, copper, cobalt, all of this which comes in the renewable energy space, right? So that will have an impact to encourage domestic manufacture of batteries.
Which helps on one side to at least encourage the domestic manufacturing industry for that, and also give the level playing field. But specifically on EVs, I think the duty rates reduction to energy and electric vehicles, which should have been announced in this budget itself.
Okay. A couple of other things on customs duty. The leather and textile industry, I think after a very long time, they are getting something in the budget. They've been left out for quite a while. As well as marine products. I mean, she made some surprising numbers of 60,000 crore rupees worth of exports. Seafood exports are at an all-time high from India.
I think that was something which was on the card because the industry has been asking for this benefit for a long time, and it has been ignored for the last 1 year or 2 years at least, is I could imagine. But this industry is booming because of the size of exports, and you rightly mentioned the quantum of it has significantly gone up. So one would really imagine that at least some of the benefits will ultimately result in some increase in the demand, and also boost the export market for these products, which is what is envisaged. And I would have actually seen something similar on the PLI side also, because that was also, some of these sectors were also included for PLI, but that did not kind of come through right now. But I hope that that also finds presence in some way in the near future.
Okay. All right. So, great to join us quickly before I let you go. How would you rate this budget? Now, I just want to ask everyone this question as well. How would you rate this budget? I think after a long time, it's a pretty, comprehensive budget that has come from the finance minister. But how would you rate it on a scale of 1 to 10?
One being the lowest and 10 being the highest, I would still keep
one
it
being the
about
lowest and 10 being the highest. Yeah.
Yes, I
And
would
8?
keep it at 8 plus because I think it was still very forward-looking, inclusive. I think the overall impetus in terms of increasing FDI, enhancing manufacturing, through these measures, progressive tax reforms on both on direct and indirect tax side, while some of the direct tax measures do need to kind of be looked at in the fine print. But I think what I can see is that it's an ongoing and a forward-looking budget, and that's what probably I would sum it as in terms of looking at setting the stage for the next 5 years for India's growth trajectory and also moving closer to the $5 trillion economy.
Oh yes, that $5 trillion target is well in sight. Thanks so much, Krishan, for joining us. And I just need to come back to our studio panelists. Thank you so much. Shal, how would you rate this budget overall from the finance minister, from an infrastructure point of view, and if there was something you thought could have been better?
I'll be rating it between 8 to 8.5, purely because the vision is quite clear and the areas where there is a requirement properly picked up.
Okay. And on the taxation front, I think after a very long time, we're getting some comprehensive moves on personal taxation.
Yeah. So I would say about 8 to 9%, 8 to 9 out of 10. Yeah. And I would look at it more from an overall perspective also when I look at it, tax and also the kind of other incentive, the direction in which they really want to go and what is there. Yeah. So I would want to go with that. Yeah.
Okay, so 8 to 9% on the personal tax front, more money in the hands of the consumers, better infrastructure development, better outlay for youth, first-time job seekers. So there's some impetus for creating jobs, impetus for farmers, minimum selling price so that the government can kind of hedge their bets over there. New crop varieties have been given out.
Yes.
So a lot of this, I think this budget caters to all the 4 pillars that she had outlined. The housing scheme for the poor, all of that gets some benefit. Electricity through the rooftop solar panel scheme. So I think overall, a fairly comprehensive budget. This discussion will carry on Indian Express and financialexpress.com. We have a lot more experts coming in after this, and now let's hear some more from what the finance minister had to say in the budget.
Personal income tax. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, review of about 30 revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%.
Hello and welcome to the Indian Express. This is the special broadcast on the Union Budget. As you know, Finance Minister Nirmala Sitharaman has just presented the first budget of the third government led by Prime Minister Narendra Modi. Although this is a firm coalition, different from the first two tenures when there was a single party majority. And we'll discuss the budget with some of the best names in Indian Express. We have Vedi, who's the executive editor, and we have Sandeep, who's the resident editor for Mumbai. This is one day when Mumbai people do look towards Delhi for economic clues. So let's look at the budget, the bigger picture first, and then we'll get into the details. Off the cuff, the first thing that hit me was that it was very different from the previous several budgets, and perhaps stands to reason because of the changed constitution of the government. Vedi, let me come to you first. What was the first big thing that sort of strikes to you in the big message that comes to you?
Yeah, I think that it is a budget after elections, and two, that it is a budget with a new government which has to depend on key allies. The fact that Bihar and Andhra Pradesh kind of make themselves so prominent in the budget, from roads and bridges to tourist circuits to power plants, to a new capital, to everything else. So everything is so loud and clear, and that stands out in the budget and shows the political compulsions of a coalition government. So good or bad is a different question altogether, but then it is a coalition budget. That was number one. The second bigger thing, also a big thing, not the bigger thing, was the tacit acknowledgement that of things that mattered ahead of elections, which is jobs. I think that the theme kind of flows through the budget, from say government chipping in with incentives for employers as well as employees, trying very hard to get interns into some reputed organizations, trying very hard to put them in jobs, some 2 crore people or whatever, and also simultaneously looking at sectors specifically which have been hurt the most in the last, as we talked about in your explained pieces, where we said 3 blows to the SME sector, from demonetization to the GST and then to COVID pandemic, the 3 big blows, which now shows in the MSMEs, some initiatives where they're saying credit guarantees, and then also the focus on employment intensive sectors such as leather and textiles or diamonds, etc., etc. So I think these were 2 things which came out very prominently to me in the budget.
Right. For viewers who sort of have watched us in the interim budget presentation also, I think one of the main takeaways during the interim budget was that we were surprised that it was, even though it was just before the election, it was not at all political.
Yeah.
And now all of a sudden we've just had this first budget, and it is completely political in that sense. It responds to the election in very direct way. So that I think is one big takeaway, and we'll sort of unpack.
And I must tell our readers, Udit, these are themes which have been recurrent in Udit's explained pieces. Employment.
So we've been talking about many of these issues,
forever.
I mean, when I heard labor-intensive industries will be promoted, this is something that we've written repeatedly, that where the government puts in the money, if you want to generate jobs, then look at labor-intensive industries. Let me also first ask the first impressions from Sandeep, who looks after the paper in Bombay. The markets were down at one point at around 1200 points something, which was understandable because some tax shifts have been. What is your first takeaway?
I think it was primarily on account of the long-term capital gains tax that was increased from 10 to 12%, even though it is over income of rupees 1 lakh in a year. That exemption limit has been raised to 1.25 lakh. But nevertheless, I mean, all the profits that you book after a year, which is over and above 1.25 lakh, will now be taxed not at 10% but at 12.5%. And given the magnitude of the kind of funds that have come over the last 3-4 years and the amount of money that people are investing in equity markets, and people are obviously booking profits too, so that will also lead to a revenue generation, which I think is the government is looking for, while it is providing for so many things for jobs and internships and all. I think this would also be a thing to raise funds, given so much money is coming into the equity markets.
So would you say that on the whole, for a lot of people sitting at home doing mutual fund investments, Is this a massive downer for them, or is this just tinkering at the margin?
It is just, see, for an individual investor, it is a minor tinkering, say from 10 to 12.5%. Given that you pay 30% highest, if you are in the highest tax bracket on a fixed deposit, 10 to 12.5 is not much for an individual. But for the government, when you look at the magnitude of money that is there, and if you see the like say 15 crore demat accounts are now there. This was around 3 crore pre-COVID. So look at the number of size of the pie now. So for government 2.5% it will mean a lot, but for investors I don't think it matters really much. Maybe the market had an immediate sort of shock reaction that, oh, it has been raised. But I think over a period of time people will realize that okay, so if you're making 15%, say 14 to 15% capital CAGR, compounded annual growth rate on an equity mutual fund or in the markets on a stock, 12.5% will from 10 to 12.5% won't mean a lot. Yeah. So if at 12%, 10% you were from 15, it was coming down to say 13.5%. Now it will be say 13.2% your return. So it's not that big in terms of an individual, but for the government, since the pie is large, it could mean an increase in yeah. The other point, while from the larger economic perspective, that on the jobs and all that, the other area was the consumption economy, which everybody was expecting that government will do something. What we have got is a minor sort of 17,500 per annum saving for those earning above rupees 12 lakh by way of standard deduction, because 25,000 has been raised. So if you're falling in 30% highest tax bracket, so you will save around 7,500 there, and by means of minor tinkering in that tax slabs under the new tax regime, you will save around 10,000. So 17,500 there for an individual.
Okay. So I mean, for again viewers, the context was that in the last 5 years, this government in particular has tried to push one growth strategy, which was to sort of incentivize businesses to invest. And the criticism of that strategy typically was that businesses will simply pocket the tax breaks that you're giving them, have higher profits, and their stocks will surge, but they may not invest that money in fresh capacity because consumers are not buying enough. So a big question in this budget was whether consumption will get a boost and whether that boost would be enough. Vaidy, what's your sense, just listening to the budget?
First impressions, I was just looking at, before I actually talk about what, I was just looking at, say, CapEx. The government has been, increasing its capital expenditure, but I was just looking at, say, 2023-2024 numbers. That is from, April 2023 till March 2024. The effective capital expenditure which the budget talks about essentially means that how much the government has put it in productive assets, etc.
Yeah.
Actually has come down. It has come down by not a insignificant amount. It has come down by almost like 1,18,000 crore. So I thought, one is this aspect.
This was in the last financial year.
It was in the last financial year. So it immediately, I am kind of thinking, boss, can the government really spend such huge amounts? The capacity
there's a question
to spend.
of absorptive capacity.
Absolutely. That is number one. Second is that the government's capacity to spend is limited. Now on, say, 12,50,000 crore, it has now become 15 lakh crore for the 24-25 year. So that's a significant jump in effective capital expenditure. If the government couldn't spend 10 lakh crore, can it spend 15 lakh crore is a question to my mind. So that is one thing. The government's capacity to spend and for the market to absorb it. That is number one. The second part is what you are saying, that what we have been all along talking this year has been that there is a stress of incomes at the bottom of the pyramid, number one. Then what it has led to is lower demand. So you're not really seeing great rural remarkable pickup in rural demand. So people are not spending more at the bottom of the pyramid. So that demand in the lower segments is not high. Rural segments not high. Neither has the urban demand increased so much to compensate for the rural demand. All this has led to poor consumption demand, which means companies need not expand. They are facing sluggish demand, so they are not expanding. So we have seen some green shoots of expenditure from what I gather, in my recent visit to Bombay, in sectors like steel and cement, which may be good, probably in real estate because some inventories have come down, etc. But my sense is the government in this budget doesn't give me this confidence that it's a huge, there'll be a huge pickup in consumption demand. I don't get that, extraordinary feeling immediately after the budget. That leads me to one question, which also we have discussed, you have discussed, experts have talked about, is the factors of production, land, labor, capital. Has the government done enough in land, labor, capital in this budget? So I think the government has made a blanket statement of an effective economic framework, which, you pointed out to me just before the... So I think then we are waiting. So this conversation may happen again next year, and my sense is this conversation is the conversation for the next 5 years. Land, labor, capital, jobs, income levels, demand, and private investment. So in that.
I think one issue, and now since there's continuity with the government and the leadership, it begs that question. In 2014, a lot of people thought that for the first time we've got a single party majority. It was the first time since economic reforms. So it was a different way of thinking. And a lot of people at that time talked about the second generation reforms, right? And in this budget, in the third term, I think in the budget priorities, if you look at it, there were 8 budget priorities, and the last point, or the nine budget priorities, and the last point was next generation reforms. But if you go to the budget speech, if you listen to the budget speech, it just says that we will come out with a new economic policy framework. It doesn't exactly tell you how those factors of production will change. So it is happening sort of 10 years later, but we are back to where we were in 2014, asking for a second generation shift.
Absolutely.
The first generation shift was in 1991 when we said de-license, deregulate, right? And we heard a lot of deregulation talk in the economic survey also. Yesterday there was a lot of talk about how the small businesses need to face less of regulatory bottlenecks. So we're coming back to, I think in some ways, the core agenda that was expected of the government, which perhaps did not work out in the first 2 terms, and now coming back to that, and now coming back to this notion that we'll come back to a policy framework. So maybe in the next budget, hopefully they'll have a clear idea of
policy framework ready. But I may just want to intervene here, Udit, in the sense that it is that there has been an overwhelming dependence on capital is not a story of 10 years. It's a story of probably 2 decades, Absolutely. 2.5 decades, right? And that the labor piece in this whole economy that we talk about has been neglected for far too long. Right?
Absolutely. In UPA we had the what we used to call it the jobless growth, right? All through that period of massive growth for India, 8%, 9%, often saw jobs actually coming down, and we saw the same. Indian Express did stories about looking at data when we grew at 9%, but many of the formal industries actually saw job contraction in the year just after, as we were recovering from COVID. So just mere 8% growth, it's a growth mix. How you grow as a country, that matters. The quality of your expenditure, that matters. And that's why we repeatedly talked about labor intensive industries and whether jobs. So this budget actually comes back to many of those issues.
Udit, may I play your role? Because I think this is something which I think you can answer it better. Say, for instance, we have talked about post-COVID, a 7% plus growth for 3 consecutive years. And say, for once, let's not get into a territory where we question the growth numbers. Huh?
Yeah.
So let's not get into it.
Yeah.
So we assume that 7% plus or 8% in the last year we did grow.
Yeah.
So what does this indicate to you?
Yeah. So I mean, viewers should understand that when we talk about GDP growth rates, it's just a accounting framework. If your inflation was to double today, it was to go to 100, your nominal GDP will just go through the roof. But that doesn't necessarily mean that in real terms we are actually very well off, or that everybody is equally well off. So that's why we repeatedly also talked about per capita GDPs. And we always looked at how there was a massive lag between some sections which were doing really well and others which were actually lagging behind. And it showed across the board, even in our the data for which companies were actually investing new capacities. It came through that they were making investments in those areas where there was massive demand, and which were premium section. So the premiumization of the Indian economy, where the person, and we talked about this yesterday also when the economic survey was brought out, that those who are buying a car worth 20 lakhs or 25 lakhs, if the demand is there, then think of all the commodities that they buy. So those industries will do well. Maybe some makeup company will do well. But if the entry level car or the two-wheeler section is not being bought, then all the commodities that are bought by that section will struggle. Right? And you'll see that in the company data also, that they are sort of holding back. They're saying, why should we? So
that is also a reflection of the post-COVID.
Post-COVID,
stress.
So and it's not just that, just the COVID. Just before COVID, our economy was slowing down. Just a year before that, we grew at less than 4%. So there was stress building up for 2 financial years before COVID. The growth rate was falling. And when you say that India is growing at 8%. There are sections of India which are growing actually at 16 or 20, and then have massive sections which might be absolutely
not growing or
actually completely getting decimated. So it's the average number, and
to that extent, I think there has been the realization, as you put it upfront in the first question, the job creation, the internship scheme, like 4.1 crore individuals, if they are, and 2 lakh crore of expenditure. I don't know how much will it lead to consumption part, because eventually, they have to be meaningfully employed first. The internship opportunities have to be created, and then
which convert into jobs
later. So it is more of a structural 1 to 2 year thing rather than an immediate consumption push.
No, that's why it's sort of a reaction to the political reality that the government could not any longer be seen as saying that everything is okay.
That's a huge reality.
That's a huge reality check, because all our reporting was showing that there were various areas of stress in the economy. That is not to say that you're not growing at 8% or 9%, but to totally ignore, say, the dip, like the 8 or 9% are also elevated numbers just by statistical measure, because you grew you contracted by 6% in 1 year, then the next 2-3 years you would sort of
grow at a
higher level, because it looks like that. It's not actually, in absolute terms, you may not be growing that much.
So as a corollary, Udit, I wanted to put the same question to Sandeep when it comes to, say, markets. So from markets, Sandeep, you watch them very closely. This stress or this 7 to 8% growth, it has reflected in the markets much more abundantly, I would say. Markets have grown quite phenomenally.
But that too is, if you see the large caps, the say top 500 to 1,000 companies, they have been beneficiaries of that. They have been saving on the corporate tax rates. They have improved their balance sheets.
But even small caps, haven't they gone up?
They have gone up. They have because so much money is flowing in. It's the valuation aspect also, because one catches up the other. If the valuations goes up in the large cap, then it goes. But the big beneficiaries also, because post-COVID, GST and all that, a lot of formalization happened in the economy. So I won't say listed entities per se, but from the unlisted entities, the business moved from the unlisted fraternity to the listed ones, the more formalized and organized ones.
Yeah.
So that is why markets have benefited. A lot of other SMEs which are not listed and not our market participants,
Yeah.
they have been losing out, both in terms of people have lost jobs there,
Yeah.
and the companies themselves have also lost.
Correct.
So the formal system has benefited post-COVID and post-GST, and which is what is reflecting in the equity market economy also, if you see.
Because look at corporate data for results. Repeatedly shows that it's not as if their sales are going up that much. The sales growth is fairly muted, but the profits are far higher. And as the economic survey,
the volume for FMCG companies
exactly.
is a
And yesterday the economic survey, the chief economic advisor noted this part that the profits have gone up almost 4 times,
But not
but the
workers'
compensation or the you typically would presume that if a company is doing so well, then it might be employing, expanding, getting more employees, or paying the existing
Paying them
employees
better.
better. But that has not happened. That compensation element has been less than double.
So that is where the problem is, the consumption problem, because if the capacity utilization is not there, and which is why even the whole thing that has happened, maybe it will be a 1 year, 2 year phenomenon. I don't see an immediate sort of consumption push because of
these
efforts. So I think there will be already capacity utilization things are happening. As I said, steel, cement, and all the real estate sector. There things are happening. But still, it's not widespread, and we are not seeing multi-billion-dollar sort of capacity expansions. And also, a lot of things are happening where existing unit, a brownfield project is being acquired by somebody. I mean, those kind of activities are happening. We're not seeing a lot of green field projects happen.
But I must say that on the macro picture of the budget, if I do, everybody says that there's only one number in the budget. You look at the fiscal deficit, that matters, right?
Yeah, exactly.
So if I just look at that one number, which is 4.9% of GDP, I think the budget is reasonably placed in terms of its,
I think markets would have perhaps collapsed much more if the fiscal deficit number was anyway higher than this, because then that would have, then the markets might have thought that the government is absolutely nervous about where it stands. So at least one thing is, this is very important for viewers to understand why everybody talks about fiscal deficit. That fiscal deficit is the borrowing level that the governments have. They're trying to bridge the gap between their incomes and expenditure. And it is not the government's borrowing per se. It's that borrowing is basically your borrowing. There is, it is the people's money, it's the taxpayers' money. So that number going up essentially means that the government will sooner or later come back with a tax bill to you, right? In one way or the other. Or it will print money and then that will show up as higher inflation. One way or the other, taxpayers or common public will have to pay. That's why it's very important that fiscal deficit number has been contained. And also that fact that the finance minister has said that we'll stick to this glide path.
And she said that a declining debt to GDP proportion,
which is also a massive shift. The FRBM model that we followed since 2003 had sort of predicated everything on the 3% of GDP for fiscal deficit and then revenue deficit. We've already got rid of the revenue deficit bit, although it's very encouraging to see that the revenue deficit for the current financial year is now projected to be 1.8%. I do not remember the last time revenue deficit was 1.8% in the last, 10-15 years. I think the only time I remember revenue deficit actually coming down was during the high growth years when there was so much growth that they could actually manage their finances
You're talking about
2007-8. 2007-8 I think was the only year when we had a 0% revenue deficit. And revenue deficit was basically, the government doesn't need to borrow for its daily needs. But even at 1.8%, it's quite a remarkably good number, and the decline in the fiscal deficit is lesser than the decline in revenue deficit. So the revenue deficit is a good thing. It should be reduced the most. But the shift is that now we are thinking in terms of overall debt. Debt to GDP is now becoming the main focal framework in which we look at this thing. The one more thing that I wanted to talk to you about was the China angle. I think the economic survey yesterday, the chief economic advisor in his presentation also talked a lot about the threat from China, the challenge from, not so much the threat, but also the fact that we are next to China, and China is this big dog in the market, in the manufacturing space. So there are two things that the chief economic advisor talked about. One, that China is not relinquishing its position in the low skill manufacturing. Now this is typically where India typically wants to
Get into
position and take over that space as Chinese workers become richer and don't want to do that part. And the second thing is that China, we do depend on China on many of the imports.
Yeah.
Right? From pharma to renewable energy, there are a lot of imports.
Even
on which
engineering,
we have,
I think, yeah.
Engineering also. And he talked about the fact that even if the world was to sort of bypass China directly, if it goes through India, then India's trade deficit with China, because we'll be importing from them, will continue. So now so there was a certain relook at India-China relations, in the sense that, just cast your mind back to some years ago, around demonetization, 2017 time, when there was this massive anti-China sentiment. I remember I wrote a piece where I said that trade deficits are not necessarily a bad thing, and I got a lot of brickbats in Express, because there's a lot of talk around that time that how can you say any trade with China is good? But I think there's a relook at being sensible as a nation on the world to relook your relations and trading relations with China.
Because certainly there have been cuts in basic customs duty cuts across some segments, but I think there's much more to be done there. At the cost of not sounding like a China lover, you need China for so many things, and the chief economic advisor has made this point, not just once. I think a couple of times he has talked about it, that a lot of stuff which is exported from India needs stuff which needs to be imported from China. So that distinction in trade we need to make, that nuanced distinction about what should be allowed to be imported, where India can relax, ease its duties or non-trade barriers, and areas where it can clamp down. So that distinction has to be made. After Doklam and after this Chinese aggression on Indian territory, I think we had closed that. We had taken a very hard view, right from Chinese investments and startups, which is a big thing, to there is a marquee product in India, a financial tech product, which got affected because of that, if not for anything else. Where Chinese investments into India plus Chinese imports into India, both of them, there was a serious clampdown. I think that clampdown is being lifted now, and you can, the survey talks about it very effectively and makes a very strong point on that. So I thought that was a very, because it has to be brought back. Administrative ministries need to be sensitized about this, because I'm sure that presentations have been made at the highest levels up to the Prime Minister on some of these aspects, and I'm sure that this is going to be a topic of discussion amongst administrative ministries.
No, it's also very important, because to become a manufacturing hub, you have to be competitive from the point of view of whether your product is competitive in the market. So for that you need cheaper raw materials, for which you need to have a good relationship with China, at least, if not the finished product, at least to get the raw materials to manufacture the finished product here, so that you can be competitive in that space.
There's one more thing, the security transaction tax. Is this something, can you just explain what is the change that has happened?
So FNO, you see, we wrote a piece yesterday, day before, and it's a huge concern that has been going on. A lot of money is moving into the future and options trading, the derivative trading basically, and retail investors are losing, at least as per senior officials in the regulatory system. 9 out of 10 investors are losing money.
Every time you actually try to do anything, it shows up that SEBI research.
And the people who are making money are the high frequency traders and the proprietary traders. A lot of money is also moving out. So the regulators and the government, as the CA has also spoken in the past, they have been very concerned. So that has been the rate has been doubled from 0.01 to 0.02%. I'm sure much more will be done, but that will be from the regulatory side. As there is a working committee in place which is in the process of submitting its recommendations, which will be implemented by SEBI going forward. So there is a serious concern there, and they are looking to clamp it down. I mean to make it rational, so that retail investors, those who really understand and maybe the real idea of derivative was hedging and all of that, but that has totally gone out of the park.
Yeah.
And now it's a daily speculation that is happening. So,
Vedi, to round off the discussion, typically opposition parties which have now got a much bolder voice in the parliament would oppose anything that the government is doing and find faults with it. But in many ways, many of the whole ordering of this budget, from agriculture, and economic survey yesterday saying farm can be our savior, to agriculture, employment, inclusive human development, these three things coming ahead of manufacturing, urban development and infra in the budget priorities is quite a turnaround.
Yeah.
And I sort of was looking at expressions that I've heard elsewhere, like women's working hostel, which was part of Rahul Gandhi's some promises for women, and many such small changes that have happened. So is this now an attempt by the government to sort of also, because there's a lot of conciliatory tones that the Prime Minister has had towards the opposition, that this is the parliament, we should all work together and stuff. Do you think the opposition are likely to sort of find this to be...
I don't want to jump the gun here. So I think it is as good as taking on board some of the good things and the realities of the from the ground. So be it employment, internship, I think those are good ideas.
Aren't they likely to shake hands and say, okay, we are together on agreement and we can have lovely peaceful parliament sessions now?
No, I think that's a very optimistic
I think it's in line with the PM's first statement when he entered the parliament.
Exactly.
I think politics will be. No, I'm just talking about politics because if I just look at the sessions that went by, they don't give you any such rosy picture of what will be politics like. Politics going to be hard and fought very fiercely on the ground.
Right. So we'll carry on with our coverage, but we'll thank Vedi and Sandeep for sharing their insights and their time. It appears as if this budget incorporates a lot of those promises, a lot of those ideas that perhaps the opposition had. It definitely reflects a different reality. It accepts that there is economic distress, and that is why the government is trying to do something about it. Whether that is enough or not, we'll get to know. And frankly, it's a large country. There's no easy way to sort of sort anything out, either unemployment or rural distress or agriculture. These are ongoing projects. But there is a very clear understanding that the government has taken note of the election result. That's a big takeaway. And it has taken its constituents, the NDA constituents on board also. As you see in what we have to show you in terms of what's been announced for, say, Bihar and Andhra Pradesh, you'll find that there is much greater voice for these states, which are the states which are now supporting the BJP to form this government at the national level. So I thank Vedi and Sandeep, and please...
When we started, market was down 600 points. Now it is less than 100 points.
Less than 100.
So there is realization that so it was a knee-jerk reaction, but slowly it sinks in.
So continue watching. We have this this whole analysis of what has happened to Bihar and Andhra Pradesh in this budget, and we'll catch you on the other side. Thank you.
Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha and Andhra Pradesh. This will cover human resource development, infrastructure and generation of economic opportunities to make the region an engine to attain Vikasit Bharat. On the Amritsar-Kolkata Industrial Corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be a good model for developing our ancient centers of cultural importance into future centers of modern economy. This model shall showcase Vikas B, Virasat B in our growth trajectory. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Peer Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited.
बेरोजगारी इन्होंने बढ़ाई है। 10 साल में जो इतनी बेरोजगारी बढ़ गई उसको कैसे कम करें, और वो भी आधी अधूरी नौकरी से।
ये इंडिया का बजट नहीं है, देश के लिए बजट नहीं है। उन्होंने बंगाल को तो कुछ ही नहीं दिया है।
Very little in terms of any good creative ideas when it comes to generating more jobs in our economy.
This shows that this government has copied the ideas of Mr. Rahul Gandhi ji.
अगर हम यूपी का ही देख लें तो निवेश की हालत क्या रही होगी, और जो बातें आंकड़ों के हिसाब से बड़ी बड़ी कही जाती हैं, जो इनके प्रोजेक्ट चल रहे होंगे वो प्रोजेक्ट कोई समय पर पूरा नहीं हुआ है इनका। अब मान लीजिए सरकार बचानी है तो अच्छी बात है कि बिहार को, आंध्र प्रदेश को कुछ विशेष पैकेज या विशेष योजनाओं से जोड़ा गया है, लेकिन उत्तर प्रदेश जैसा प्रदेश जो प्रधानमंत्री देता है, क्या वहाँ के किसान के लिए कुछ बड़े फैसले हैं? किसान की फसल की पैदावार, उसकी कीमत के लिए क्या कोई इंतजाम है? कहने को तो याद होगा आप सबको कि पिछली बार कहा था कि मंडी और एग्रीकल्चर इंफ्रास्ट्रक्चर के लिए स्ट्रेंथन करने के लिए लाखों करोड़ रुपए हैं। अगर वो इंफ्रास्ट्रक्चर स्ट्रेंथन हुआ था तो इसका मतलब किसान की आय दोगुनी होनी चाहिए या किसान की आय बढ़नी चाहिए थी, वो तो नहीं बढ़ी। तो किसान के साथ संकट पैदा किया इन्होंने, बेरोजगारी इन्होंने बढ़ाई है। 10 साल में जो इतनी बेरोजगारी बढ़ गई उसको कैसे कम करें, और वो भी आधी अधूरी नौकरी से। आप 2 साल की, 1 साल की या कुछ ट्रेनिंग करा करके नौकरी या रोजगार का सपना दिखा रहे हैं। देश का नौजवान अपना भविष्य बनाने के लिए पक्की नौकरी चाहता है, और फिर जो आधी अधूरी नौकरी है क्या उसमें आरक्षण होगा?
आज जो बजट पेश हुआ है कैसे देखते हैं बिहार और टीडीपी?
अरे ये तो कुर्सी बचा बजट है। उनको कुर्सी बचाने के लिए जो पार्टी को लिए कुर्सी बचाते हैं उनके लिए बजट है। एनडीए वाला जो है उसका साथ नीतीश कुमार और आंध्र प्रदेश का, उनको सेव करने के लिए, उनको पास में रखने के लिए इसका बजट है। ये इंडिया का बजट नहीं है, देश के लिए बजट नहीं है। उन्होंने बंगाल को तो कुछ ही नहीं दिया है। बंगाली को वो लोग देखने नहीं सकता है, बंगाल को वो लोग देखने नहीं सकता है। दे कांट टॉलरेट बंगालीज, दे कांट टॉलरेट बंगाल पीपल। वो साफ हो जाएगा बीजेपी बंगाल से।
नहीं, देखिए मैं कह रहा हूँ ना, ये तो पूरी तरीके से मैनेज किया जाता है, और ये जो असली जो मतलब अगर चीजें सामने आ जाएंगी, मुझे लगता है कि पूरी की पूरी तरीके से सरकार बेनकाब हो जाएगी। सरकार केवल और केवल भ्रम में और दिखावटी काम कर रही है।
इसका तो एक ही मतलब होता है कि अभी बजट पूरा भी नहीं हुआ, तो अब पूरा होने पर कितना गिरेगा? और
मैं समझता हूँ कि ये पूरी बजट में कुछ, मैंने पहले कहा ना, बजट केवल भ्रमित करने वाला है, लोगों को परेशान करने वाला बजट है, कोई दम नहीं है इसमें।
Overwhelming budget. I didn't hear anything about the key issues facing the common people of our country. There was no mention of Manrega. There was no mention or insufficient mention of any steps taken to improve the income of the ordinary person. We have seen far too little from the government when it comes to taking care of the severe income disparities in this country. Job creation, there was a token gesture made towards that, but unfortunately very short on specifics. And I personally welcome only one provision, which is this abolition of the tax on angel investors. I myself had recommended it to Shri Arun Jaitley more than 5 years ago. Finally it has happened. I'm glad that's being done. We must have more investment coming in to generate more jobs. But otherwise I find very little in terms of any good creative ideas when it comes to generating more jobs in our economy and more opportunities for young people and for those at the bottom of the pyramid to improve their incomes. We will have to study the budget in much more detail, but I would say it's an underwhelming budget.
This budget has more or less copied the Congress constitution, Congress manifesto, and the main important thing is about the Yuva Nidhi, which Rahul Gandhi ji has in the Bharat Jodo Nyaya Yatra, he has evolved it, and he promised that through the apprenticeship for the first year of the youngsters who are completing, we will give 10 crore jobs to those youngsters with a 8,500 rupees monthly stipend. This government has announced it as 5,000 rupees per youngster who is going to be in the apprenticeship. This shows that this government has copied the ideas of Mr. Rahul Gandhi ji.
So you are the in charge of Andhra Pradesh also. TDP's and JDU's promises have been fulfilled. They are saying that in both the parties we have learned this and we are taking up the special category issue.
Special category issue has not been given. Special category for Andhra Pradesh has been denied, and they are giving lollipop to Andhra Pradesh, which says that 15,000 crores of rupees bank loans for the capital formation is going to be just a lollipop. Andhra's problem is much more deeper. Special category state is an assurance given by the Prime Minister of India in the floor of the House. I hope that Prime Minister of India keeps its words.
Welcome back to the Indian Express YouTube channel on our continuing coverage of the Union Budget. We heard from some of my colleagues in Indian Express about their thoughts and understanding of the Union Budget. And now we have two more colleagues. We have Harish Damodaran, who's the Rural Affairs Editor, and Ishan Bakshi, who writes about the economy on the opinion pages. Let's kick-start with the first basic question. What are your first takeaways from the budget, Harish?
I think the Modi government maybe 3 months back wouldn't have presented such a budget.
It actually didn't when they had the interim.
Yeah, correct. So they would not have, definitely Mr. Modi wouldn't have liked the kind of budget which was presented today.
Yeah.
You know, and there's no big bang reforms and that kind of a thing. So I think this was more a kind of a holding operation, you know, that I need to basically rule for the next 5 years. Okay, so therefore, politically, I must first get my allies on board, you know, because I don't have 303, I have 240, right? So the guys who give me who take me past 272, they need to be assuaged. So that's how, you know, Andhra Pradesh and Bihar and Bihar have got all those packages kind of thing. So I think Mr. Modi definitely would have liked to leave a real kind of a reformist imprint, you know, which he has not been able to do because of 63 less seats.
True.
Okay. So therefore, what you do the best under the circumstances. The first is you lock up political support for the next 5 years, you know, political stability.
True.
Okay, so and I think both Nitish Kumar and Chandrababu Naidu would be very happy with whatever has been allocated, you know. I mean, so you lock in the political support, you know, the stability. Whereas on the other hand, you see there's nothing for Maharashtra or Haryana, which are all supposed to go to the polls in the next few months. Okay, so I think Modi is not looking at now at the near term, you know. I mean, he's looking at, you know, how do I ensure
secure
that
the 5 years.
Yeah, secure the 5 years, you know. So I think that has been the first priority. And the second priority is, I think, you know, to come back to, ensure macroeconomic stability, you know. So basically that old fiscal glide path, you know, bringing down the fiscal deficit below 4.5% of GDP. And also I think because the debt to GDP, the levels had gone too high, to bring it down. So I think that is the second thing. So basically I would say, you know, political and macroeconomic stability rather than big bang reforms. So which is why you have, there's quite a boring budget, you know.
Yeah.
But which is fine under the circumstances.
Yeah. Ishan, what's your take?
So one point I want to start off with is that there seems to be a closer alignment this time between the economic survey and the budget.
True.
Some of the issues highlighted in the survey, for example, the employment aspect of the crisis that the country is facing, right? I mean, that seems to find some place in the budget. I mean, finance minister has introduced a few things for generating more employment. And that is a very good aspect, I think, of the closer alignment between the economic survey and the budget, which we've not seen in the past. Second, as Harish mentioned, despite everything, they have still persisted with the fiscal consolidation glide path.
Yeah.
The realization is deeply entrenched that we need to rein in the deficits, we need to bring down debt to more manageable levels. And that is very welcome, it's very encouraging. So these are the initial comments that I would.
So, for viewers also, that the way the government was going about it it had a particular philosophy in the last 5 years of how it wanted to promote growth in the country, and from that perspective, the government believes that it seemed to have done a lot. It had given a corporate tax break and taken the lead on infrastructure spending and capital expenditure, but those results were not coming through, and there was a typical argument given in the lead up to the election that there was certain amount of economic distress, and perhaps that resulted in some kind of changes in the electoral results, which is what we are seeing. And one big change in all of this, and we saw that yesterday in the economic survey also, which talked about how the farm sector could be India's savior. Now, typically, farm sector was never thought of being India's savior in the recent 2-3 decades. We have always thought about making that structural transformation from farm to manufacturing and services. But in the budget priorities, agriculture is the number one priority, which is both important from the symbolic point of view, but also because what the government plans to do. So let's understand from Harish, what did you make of it? They've given the number one priority to agriculture. Have they actually done enough in that?
I think the proposals are all mostly very cosmetic.
Okay.
Like they say they're going to get 2 crore farmers to do natural farming. How do you do it? I mean, first of all, farming itself is a natural process, but and then now you're saying that you're going to encourage 2 crore, I think, farmers to do natural farming in the next 2 years. How is it possible? I mean, it's just not possible. Then there are a lot of again homilies on making India self-sufficient in oil seeds and pulses.
Yeah.
The fact is,
We've had many oil seed and pulses missions.
Absolutely. So they've even talked about vegetables. A few budgets ago, we had something called the top mission, right?
Top
basically
mission,
tomatoes, onions, and this thing. So we know that's not happening. And the fact is, India is now importing record quantities of both edible oils and pulses. Okay, let's be very clear. The government's focus, as far as interest in agriculture, as far as it is concerned, whether it is government or RBI, is how to control food inflation. Okay, so agriculture, I think,
so it's more consumer centric in its approach.
See, whether we like it or not today, I think yesterday's the economic survey had talked about, right? And is it possible to do inflation targeting by ignoring food inflation? But that's not possible. So I think the government's interest in agriculture is very short term, and I don't see any real long-term vision, for agriculture in this budget. Though as you say, they've put it, upfront in the number one. So they are very vague kind of things. Nothing is clear on agricultural research. I would have thought that there should be some kind of an increase in the outlays for the ICAR for agricultural research. I didn't see anything of this kind of thing, and we just have sort of a general, more kind of very general statements, and
in terms of budget allocation, have the allocations to that ministry gone up
not
quite
particularly?
substantially?
Neither have they have not tried to rock the boat either. See, like for example, they have not touched your urea subsidy or fertilizer subsidy, right? I mean, they have left. They basically we are lucky because now your fertilizer prices have come down, right? I mean, the global prices are less. So the fertilizer subsidy bill, your food subsidy bill, and all is coming down in the natural course, without any great effort or something. In the case of the food subsidy bill, it has come down because earlier you were allocating 10 kgs per 10 kg of rice or wheat per person per month, to the NFSA beneficiaries. Now you have gone back to 5 kg. Okay, so your subsidy bill is coming down in the natural course. I think, So I don't think there's been any real game-changing thing. Neither the farm laws.
Yeah. So I wanted to ask, did you see any imprint of the farm laws in some other way? Was the land reforms bit that they talked about later on in the
see
budget
they are
speech?
talking about some kind of creating a digital infrastructure for agriculture, where you'll be able to identify farmers, farmers and their holdings. So I think maybe in the long run maybe the attempt is to move towards, direct cash transfers, like if I know how much, what is the land holding of a particular farmer, so I can basically then, transfer money into his account, but there's no, I didn't come across any coherent kind of a vision.
So there's no
for
clear
agriculture.
structural change that you're trying to bring about in agriculture.
No. And probably they didn't want to rock the boat and all these things. Maybe that is the package for the Haryana and Maharashtra election. Basically, don't deregulate urea and all now. I think that is the whole thing. So whereas a new government, one would have thought that they would do something on maybe on agriculture, especially focusing more on agriculture research. Moving away, redirecting expenditures from subsidies to investment, but there's nothing of that kind. I didn't come across anything in the budget.
I think to the extent that they think that the economic situation has impacted their political fortunes, they would have intervened or they have intervened. I mean, if you look at the employment scenario, even up to the run-up to the elections, the data was very, very clear, right? Over the last few years, when we've had this surge in self-employment, right? We've had more women coming out. A lot of economists have linked this to sort of distress in rural areas. But the previous budgets did not really emphasize on that, right? I mean, there was more of a belief in the self-employment nature of employment. But this budget has taken a dramatically different approach in that sense, right? I mean, to the three approaches that the finance minister has outlined. So I think, to Harish's point, I would think that to the extent that they think that the economic situation has influenced voting outcomes, electoral outcomes, they would have tried to address it.
At least not be tone deaf to that aspect and seem to be doing something about it by giving it the top priority and sort of talking about what you need to do and then figure it out as you go along. The second point also was quite important because it is employment and skilling. Now, employment is one issue on which there's been a lot of politics because there's been massive stress on employment since 2017-18 when the first time the PLFS data showed that it had hit a 45-year high, and there was a lot of politics around it, government not wanting to accept that data, then later on accepting it after they came to power, and then there's been a constant bickering, and to the extent that this time in the economic survey, finally the chief economic advisor accepted that their data is an issue. We need to have better quality data on employment. But in the absence of that, there was a lot of back and forth. Are you using CMIE data? Are you using PLFS data? So now the mere fact that employment and skilling is again something that we've been seeing from UPA times. All kinds of efforts, even under Mr. Modi, Skill India and stuff. This is again not being tone deaf to something that is really out there. What's your?
So I'll go back to the economic survey again, and this is the alignment that I was talking about. So the economic survey gives you hard numbers this time, right? Of how many X number of jobs you need to create. It talks about 78.5 lakh jobs every year for the next X number of years. It talks about the fact that only half of the youth leaving college are deemed employable, right? I mean, that's the quotes. So there is a sort of a realization of the scale of the challenge and the admission perhaps that the existing frame of things, this existing programs may not be enough to facilitate that level of employment that you need, moving people into more productive jobs. So I think that is what is refreshing to see, and that there has been an effort in that direction.
Right. And in terms of, again, on employment, there's been a lot of tinkering of the kind that we heard typically from the opposition benches in the run-up to the election, isn't it? I mean, again, what you said on agriculture, it doesn't have a clear structure on what we will do to improve on employment also. There is, and perhaps justifiably because there is no real one silver bullet that any government can sort of bring about. There is, I mean, in your reading from the budget, was there any one thing that sort of caught your attention? Okay, this might actually solve things, or is this more about alleviating that stress?
I think it's sort of incentivizing the private sector to sort of encourage more formal jobs. I mean, so the schemes that were mentioned, I think that is the direction that they are taking. And ultimately, it's the private sector that is going to drive employment, right? The public sector is incapable of generating that many jobs, that scale.
Yeah.
It is the private sector, it is private investments, it is manufacturing, it is low and semi-skilled jobs that will be created. And in the economic survey as well, I mean, there's a distinction drawn between new people entering the labor force and those exiting agriculture. So that emphasis is there, that understanding that has been drawn on.
On MSMEs, that is another area which has seen considerable stress, all the way going back to demonetization, start of GST and the transition that has been happening, digital shift. Anything that you sort of noted that the shift, because MSME was one thing that the economic survey again talked a lot about, that we need to build that, they use the term middle stand, that lower bunch of companies. Anything that struck, that sort of jumped out in the budget on the MSME bit?
There was some mention of exports, of digital exports on that, but at the end of the day, the whole argument and the whole emphasis has to be on increasing productivity, right? I mean, on increasing.
There were a lot of credit.
Yes, there were
guarantees.
Exactly.
Yeah.
So the whole emphasis has to be on increasing productivity, increasing jobs, and I think to an extent that is what they were trying to focus on. How it plays out will obviously we have to see. And it's also to the government's credit that they also talked about strengthening the data architecture, right? I mean, there was talk about that also, considering the criticism in the past that they have received.
And so, at least they have not shut it out, saying that no, nothing is wrong.
Yeah. So there has been movement on that front as well.
And apart from agriculture, a lot of people just equate agriculture to rural India. But apart from agriculture, was there anything else for rural India?
I didn't come across anything specific for rural India, except that again about the Pradhan Mantri Gram Sadak Yojana and the Pradhan Mantri Awas Yojana. So I think it is more of the same.
For example, the economic survey yesterday talked a lot about within agriculture some diversification. Talked about getting people into forestry, fishing, and other things other than just this good old mainstream.
See, farmers are already producing something. Now, how do you add value to that? That's precisely what is called, basically the idea of a farm as a factory.
Yeah.
Okay, so agriculture doesn't mean just the farm, but agriculture means also, where you generate jobs outside the farm and closer to the farm. I think that is broadly the idea, and I think this was mooted first by Professor Ramesh Chand of Niti Aayog. But again, I don't see a coherent, idea of, I mean, how to achieve this thing. But overall, what I liked about this budget is there's no bluster. It's very humble. The very short budget, right?
Yeah, very short. Very cut to the point. We were surprised when we were listening. Straight away coming to the priorities.
Yeah. So no,
and not too many quotes from.
Yes. I think deliberately. I mean, I think from yesterday's economic survey itself, I think there's been some attempt at some kind of a sedate expectations. Don't build up too much of kind of a thing. Whereas I think earlier, I think in the first two terms, I think they wanted to make history every day. Whereas now I think it is sort of, hey, come on, let's stick with the fundamentals. Let's get our fiscal deficit and all in order. Let's manage our finances, and then let's see we can do something. So I think some of the intentions are very nice, including on the employment and this thing. Though I don't know how much of this will, how much will this encourage companies to recruit new people and all this thing. But overall, I think this budget does nothing to some extent, and which may not be a bad thing.
Which may not be a bad thing. At one level, Ishan, it's also true that we tend to have this exalted anticipation and expectation from the budget, right? Ultimately, budget is essentially about government finances. They might tweak something here or there, but year, from 1 year to another, there won't be such a massive difference that you can create a totally different economy. So in that sense, it's a good thing that we are sort of keeping the expectations within bounds and trying to do at least the bit that sort of heartened my heart was that those bits that we repeatedly wrote about, like labor-intensive industries. So when I heard that term, I was happy that okay, you've looked at something that typically creates jobs and not just gone with something like one argument was. Criticism was that a lot of PLI money was going into capital-intensive industries.
There's not much talk about PLI, right?
There's not much talk about PLI.
In fact, they're talking of ELI. Right? From PLI to ELI, right?
Gati Shakti, as you pointed out in the newsroom, that we didn't hear about Gati Shakti. Infrastructure itself, while it is one of the priorities, comes much below.
So if I just will point out, even the economic survey on the employment numbers, right? They have assumed, I think, less than 1% reduction in employment in agriculture over the next years, right? So it's a very realistic assessment in that sense. I mean, it's not a over-the-top assessment in that, you know.
The simple message in this budget is we need to govern for the next 5 years. Okay, let's forget about the next election.
This is very familiar territory. I think for most journalists, this is very familiar territory. And would you say then final question that this bookends the 10-year period of the single party majority?
Absolutely.
In terms of actual policy framework, right? Apart from whatever they might say, but that period is over.
This budget has 240 written all over it.
All over. That is the headline actually. The 240 is the headline. Okay. Thanks a lot, both of you, for sharing your time and insights.
Great.
And to all the viewers, continue watching the Indian Express. We are just parsing through the budget documents, and in tomorrow's edition and on the website, we'll have more details for you. So stay tuned. Thank you.
साथियों, रोजगार और स्वरोजगार के अभूतपूर्व अवसर बढ़, ये हमारी सरकार की पहचान रही है। आज का बजट इसे और सुदृढ़ करता है। देश और दुनिया ने पीएलआई स्कीम की सफलता देखी है। अब इस बजट में सरकार ने एम्प्लॉयमेंट लिंक्ड इंसेंटिव स्कीम की घोषणा की है। इससे देश में करोड़ों करोड़ों नए रोजगार बनेंगे। इस योजना के तहत जीवन में पहली नौकरी पाने वाले युवा की पहली तनख्वाह हमारी सरकार देगी। स्किल डेवलपमेंट और उच्च शिक्षा के लिए मदद हो या फिर 1 करोड़ नौजवानों को इंटर्नशिप की योजना, इससे गांव के गरीब के मेरे नौजवान साथी, मेरे बेटे बेटी देश की टॉप कंपनियों में काम करेंगे। उनके सामने संभावनाओं के नए द्वार खुलेंगे। हमें हर शहर, हर गांव, हर घर एंटरप्रेन्योर्स बनाना है। इसी उद्देश्य से बिना गारंटी के मुद्रा लोन की लिमिट को 10 लाख से बढ़ाकर 20 लाख रुपए किया गया है। इससे छोटे कारोबारियों, विशेष रूप से महिलाओं, दलित, पिछड़े, आदिवासी परिवारों में स्वरोजगार को बल मिलेगा।
वित्त मंत्री ने जो अभी बजट अनाउंसमेंट की है, उसमें एक बहुत वाइड रेंजिंग उन्होंने एरिया कवर किया है। यूथ से लेकर के, गर्ल्स से लेकर के, विमेन से लेकर के, स्टार्टअप्स तक भी, एग्रीकल्चर, मतलब कोई ऐसा एरिया लगता नहीं जो उन्होंने छोड़ दिया है। उन्होंने कई एरियाज में स्पेशल फोकस नया दिया है। जैसे मल्टीनेशनल्स को स्पेशल फोकस दिया है, ईस्टर्न एरिया के डेवलपमेंट को स्पेशल फोकस दिया है, स्टार्टअप्स को और एनकरेज करने के लिए स्पेशल फोकस दिया है, और जो एम्प्लॉयमेंट जनरेशन और एम्प्लॉयमेंट एनकरेजमेंट के जो प्रोग्राम हैं वो बहुत एनकरेजिंग फीचर्स हैं, वो जरूरी भी थे इस समय, क्योंकि जो सबसे बड़ी हमारी जो दिक्कत इस समय लगती है वो जो फीलिंग ऑफ जॉबलेसनेस है उसको एड्रेस करने के लिए जो उन्होंने किया ये सोसाइटी के लिए और कंट्री के लिए अच्छा रहेगा।
कॉर्पोरेट टैक्स और पर्सनल इनकम टैक्स पे जो उन्होंने
कॉर्पोरेट टैक्स में उन्होंने कोई खास फर्क नहीं किया, वो मल्टीनेशनल के ऊपर किया है जो मेनली है। जो पर्सनल इनकम टैक्स है वो अच्छा है, लोअर इनकम के उन्होंने टैक्स कम कर दिया है। सो ओवरऑल उन्होंने अपनी तरफ से 17,000 करोड़ का बेनिफिट दिया है थ्रू टैक्सेस। सो एनकरेजिंग ओवरऑल सिस्टम। और जो उन्होंने नॉन फाइनेंशियल एसेट्स पे टैक्स किया कम और शॉर्ट टर्म कैपिटल गेन जो किया है 20 से 12%, वेरी वेल।
Focus on continued thrust on public capex, focused on very important areas like agriculture, MSMEs, skilling, employment. A lot of focus on this ease of doing business. A lot of areas are getting simplified. Certain areas, the Honourable Finance Minister has also spoken about comprehensive review of legislation to simplify it. I think all are a very strong signal for greater ease of doing business and a very strong signal to bring in reform at the, bring in states, the reforms at the state level also. And very importantly, a comprehensive paper on the next generation reforms to look at all the factor costs. I think these are some very important, very strong statements, very strong announcements have been made, and it touches upon many of the areas that has come in the form of suggestions, members of what CIA had presented, and we are, it's a very positive message for the industry and for all stakeholders in the economy. All in all, an extremely good budget, a lot of investments, and yet fiscal glide path being better than what anybody had anticipated at 4.9%. So it's indeed a very commendable budget.
एम्प्लॉयमेंट जनरेशन, हमारी इंडस्ट्री जो है वो एम्प्लॉयमेंट जनरेट कर रही है, तो हमने देखा है कि एम्प्लॉयमेंट के ऊपर एम्प्लॉयर्स के लिए और एम्प्लॉयज़ के लिए काफ़ी अच्छी बात की गई है, विच इज़ गोइंग टू गो गुड वे। एंड एम्प्लॉयमेंट स्किल डेवलपमेंट के ऊपर भी बात की गई है, तो स्किल इज़ वेरी इंपॉर्टेंट टुडे। तो हमारी लेबर इंटेंसिव इंडस्ट्री है, उसमें ग्रोथ होगी। और एक्सपेंशन प्रोजेक्ट्स के लिए बात की गई है। इम्पोर्ट ड्यूटी विच इज़ वेरी इंपॉर्टेंट फॉर आवर इंडस्ट्री, कि हम दुनिया से कहीं से भी माल खरीदें, कहीं भी माल बेचें, उसके ऊपर भी आई थिंक एग्जेम्पशन ऑनरेबल फाइनेंस मिनिस्टर ने किया है। सो दिस विल गो ए लॉन्ग वे इन डेवलपमेंट ऑफ आवर इंडस्ट्री। हम लोगों का ग्रोथ पैटर्न बहुत बड़ा है, मैन्युफैक्चरिंग इंडस्ट्री है, ग्लोबल डिमांड्स हैं, और कैपेसिटी बिल्डिंग के ऊपर भी बातचीत चल रही है। सो आई थिंक ओवरऑल बजट जो है लेदर इंडस्ट्री के लिए सेटिस्फैक्ट्री दिख रहा है। अभी और डिटेल्स आने वाली हैं, सो लेट अस रीड देम ऑन फाइन प्रिंट्स, बट आई थिंक उन्होंने उसको टच अच्छी तरीके से किया है। और ओवरऑल MSME के लिए जो बातें कही गई हैं विच इज़ वेरी वेरी इंपॉर्टेंट। हमारी जो लेदर इंडस्ट्री है उसमें 75 to 80% इज MSME, और क्रेडिट लिंक्स और क्रेडिट इन्वेस्टमेंट्स, उनके ऊपर जो पूरी बात की है, ओवरऑल इंक्लूसिवनेस है बजट के अंदर। सो वी आर सीइंग दैट द कॉमन पीपल, द एम्प्लॉयमेंट विल बी, विच इज़ वन ऑफ द मोस्ट इंपॉर्टेंट फैक्टर्स टुडे, हैज़ बीन टच्ड इन द बजट, और आई थिंक दैट विल हैव सम इम्पैक्ट ऑन द इकोनॉमी इन इंक्लूसिवनेस, इन अपलिफ्टमेंट ऑफ कॉमन।
साथियों, रोजगार और स्वरोजगार के अभूतपूर्व अवसर बढ़, ये हमारी सरकार की पहचान रही है। आज का बजट इसे और सुदृढ़ करता है। देश और दुनिया ने PLI स्कीम की सफलता देखी है। अब इस बजट में सरकार ने एम्प्लॉयमेंट लिंक्ड इंसेंटिव स्कीम की घोषणा की है। इससे देश में करोड़ों करोड़ों नए रोजगार बनेंगे। इस योजना के तहत जीवन में पहली नौकरी पाने वाले युवा की पहली तनख्वाह हमारी सरकार देगी।
Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well.
And welcome back to this continued coverage on Budget 2024 with Indian Express and Financial Express. You're watching a live feed and we're bringing you discussions all through with various people on how the budget is fared. Right now I have with me Vishwas Panjar, tax partner at Nangia Anderson Limited, and he was going to decode some of the direct tax announcements that were there in the budget. Long-term capital gains change in especially for those dealing in property. The indexation has gone out, and LTCG there's a change over there. If you could just run me through, Vishwas, about the changes and your view on what the finance minister has done.
Okay, thank you. So this budget was significant. We all knew, because this is the first budget of this new government. Right, the new government in a lot of sense, right? Not absolute majority. So while there may be a lot of other interesting things to talk about focus on some other states, but like you said, I'm going to concentrate my comments on the direct tax aspects. Now, to begin with, I think what I should mention is that there seems to be a clear line of sight, clear roadmap that the government has with respect to the direct tax provisions. Very significant announcements that has been made, perhaps not otherwise captured in the other discussions that might have happened on this channel, is that the government is looking to do an overall revamp of the act, right? So this is good, because obviously the act is like 50 years old now, more than 50 years old, and so it does require. So while amendments happen every year, but what a revamp can do, amendments can never achieve that. What's important, perhaps some of our viewers would remember, is that a direct tax code was proposed almost more than a decade ago. 10 to 13 years. A lot of work had gone in. More than 2-3 years of work. We as professionals also had contributed to the development of that in certain manners, but it was shelved at certain point of time. And now I hope some of those new work that has already been done can be used now. So it's otherwise a very, very good move. Now you also mentioned capital gains tax, right? So that's something that I thought was like missing in the speech, but a very significant development is that the indexation benefit has been removed altogether, right? And what is an indexation benefit? Indexation benefit is you getting compensated for the inflation that the economy already has, right? So you could have inherited a property, or you had bought something for 30-40 years ago. The actual worth of that property may have remained the same, because of though you may get more rupees for that as compared to the price that you acquired it for, but in real terms that may have had the same value. And if that was the case, because of the indexation benefit, my index cost of acquisition was supposed to be available, reduced from your sale consideration, and it could result in only the net income, inflation adjusted gains only getting taxed as capital gains. amount that itself has now been removed. Indexation was obviously always only available for things like gold or real estate or unlisted shares. But doing that, I think, is rather bold, considering that the economy still has inflation. It's not, and obviously it had to factor even the historical inflation, not only the current inflation, but the historical inflations. People are still selling houses which their grandfathers acquired, right? So what happens to the inflation that has happened in the country in the last 60, 70 years? The other thing is that
Sure. Could it be because the government now views inflation coming down at 4.9, 4.5% for
definitely
real inflation is less than 4%?
Yeah, I know, but that indexation, as I said, did not only account for the current inflation or the going forward, also for the historical inflation, right? Yeah. Because then what happens? The inflation, the indexation benefit goes away completely, right? It's what, as per the present amendment, it goes away completely. So even if you had bought a house, let's say in the 60s or 70s, there has been significant inflation in the last 50, 60, 70 years, but you lose that indexation benefit. You still, even if you have any gain, you have to pay tax on that. Might be at a reduced rate, but still have to pay. Earlier there was a possibility that you don't have any gain and you don't have to pay any tax. So that's I think that's quite significant. For the markets, I would say that for the stock market, I would say that yes, there seems to be a clear thrust on trying to promote long-term investments as opposed to speculative. That we have seen concerns from SEBI and otherwise market regulators on the increase in the speculative trading, and therefore there's a whooping increase in the STT rate of derivatives.
0.02 to 0.1.
Yeah, so it's quite a significant increase, and also the gap now between the long-term tax rate and the short-term tax rate has widened, right? It's now 7.5%. So that though the long-term rate itself has increased from 10 to 12.5, so it's there is an intention to promote long-term investments, because globally it's an understood fact that equity markets are for long-term. Everyone keeps repeating that long-term. So there is definitely a intention to promote a long-term investments into equity markets. But if one were to see a standalone, the long-term capital tax rate, now that is increased from 10 to 12.5%. Though, as I said, the gap between the long-term rate and the short-term rate has increased.
No, it increased.
Yeah, the gap has increased. So in that sense, there is a more incentive to stay long-term. Yeah. So it's mixed. You can say that.
Right. I think we also have Akhil Channa, partner of Global Mobility Service Tax and Regulatory from Grant Thornton, Bharat, also joining us. Akhil, if you can hear me, welcome to our coverage on Index Plus and Financial Express. What did you make of the budget, Akhil, before I take you further?
I think it's a first of all, I would like to say hello to my fellow colleague Vishwas. We know each other for many years.
Vishwas, Akhil says hi.
So I think it's a pragmatic class act, balancing a lot of benefits given to the middle class taxpayer. And I think there are a lot of schemes around, especially around new tax regime, the people who opt for that. So I think overall is a balancing act, I can say that, by the government, with a lot of benefits which have been given to the middle class being the taxpayer, and as we've been hearing a lot on employment generation and skill development is a focus. Especially with the employment linked scheme which has been introduced, where a lot of benefits are given, to the people who are joining the manufacturing sector and the first time employee into the formal sector, and towards the direct transfers of the benefit to them, EPFO and all. So I can see the focus was very much there, and obviously they want people to move to the new tax regime. I can call out few benefits which are going. The standard deduction has been increased from 50,000 to 75,000. Then the slab, there's a rationalization of slab rate, which is giving a direct benefit of 10,400 to the people who are for 15 lakhs, even if they don't claim any benefit of salary reductions and all. And the third one is the national pension scheme. Employer contribution was allowed to be deducted from employee salary up to 10% earlier, which is now proposed to 14%, which is a big change because there is no limit on that, and 14% is big amount of salary. And then they've increased the deduction on family pension from 15,000 to 25,000. So that's the biggest relief. So overall, they want people to opt for the new tax regime. That's an intent. Till last year, 85% of the people still opted for old tax regime, and 15% of the people moved to new tax regime. But now the government giving all these benefits, looks like that people have a lot of intent and will see the change.
Yes, hi, Akhil. Hi. I am not sure whether he can hear me now.
No, I can. I don't know whether you will be able to hear me when I was talking.
Yeah, now I can. Now I can. I had, something that we were discussing, right? So the Indian socio-economic setup is so much about saving, right? That it seems that nobody is the owner of the wealth. Everyone is preserving for the future generation. That's how our culture has been. The HUF setup, and those are very unique to India. The percentage of income that we save as opposed to the Western world is quite crazy. So it seems that the new India, the new generation, they perhaps prefer a simplified tax regime and a lower tax rate as opposed to a tax nudge to make those investments. Investments have not gone down really, right? Obviously the disposable incomes have also not gone down, so therefore the investments have also not gone down. So most of the deductions that are available with respect to in the old regime, they are investment linked. You make an investment, you're doling out, you make a certain investment and you get a deduction. It seems that it's very clear that in those nudges or tax breaks are not required. It's perhaps better to have a simplified tax regime and a lower tax rate as opposed to a tax break, induced investments.
This is a very interesting point that the FM has made, because now you're trying to drive consumption on one hand. You're making the tax regime easier. You're not encouraging savings as such. So you're actually putting more money in the hands of the consumer. Because earlier, at least, the old tax regime, we were forced to save because you had your ATC, TD, all of that, where you could save something on life insurance, medical insurance, or maybe a housing loan or whatever. So everyone tried to put in everything in that, tuition fees, whatnot, right? But now all of that is gone. It's just, income, expenses, what's your net income, tax on that straight.
Yeah, but what's important to also remember is that 1.5 limit that has not changed for several years now, right? I can't remember the last time it was changed, but and the income proportions have gone a lot, right? So even the tuition or etc., those things that you mentioned, those have been stagnant, right? So the proportion of that compared to the income category is quite low now. So I wouldn't. So it's naturally the economy is moving towards consumption. I don't think the government itself is trying to promote that. What is government? There are other avenues also created, right? The equity markets itself, the quantity and the amount of investments that go into the equity markets is phenomenal. So you don't. It's organically going into that direction rather than government trying to inorganically making those structural for that much tax changes to induce that. That's not required.
Okay. Coming back to the direct tax thing, that angel tax for startups.
Yeah.
That I think was a big surprise move. Or was it expected?
Well, I won't. So it was expected in the sense that was it on a wish list? Yes, it was on a wish list. Whether realistically people expected it to move, maybe not, right? Because Again, so angel,
10
what
to 12
exactly is
lakh
the what is the
15%.
angel tax? Is that
12
if there
to
is
15 lakh
if
rupees,
if you're making
20%,
an investments
and
into the
above
equity
15
shares,
lakh
subscribing
rupees.
to the equity capital of a company, and you there is an excessive premium being received. Excessive meaning compared to certain prescriptive methods of valuation. If it's an excessive, then that income that's supposed to be an income of the company, and then you get taxed on it, right? So that's been and everyone was crying foul is that now it's a startup culture. You don't really even have to. Most of the companies are have cash burn and still have a high valuations. So the valuation is something that you perhaps is a more intricate subject, and not everyone understands it. So allowing, yep.
Yeah, okay. No, I just want to get back to Akhil. I think.
Yeah, sure.
Akhil, if you can hear me, the changes in.
Yeah, I can hear you. Can you hear me? Can you hear me?
Can you hear me?
I can, but am I audible? No.
Yes, you're audible.
Yeah.
So the changes in tax slab, I mean, the net savings is about 17,500 is what the finance minister said, with all of the tweaking in the different slabs. The lowest slab is 0 to 3 lakhs, no tax, and the highest 15 lakhs plus 30%, and then you have the tweaks in between, right? This, like I was asking Vishwas also, is more of it's kind of driving consumerism a little more, so putting more money in the hands of the consumer. But on one hand, is it also not encouraging people to save? Because there's another statistic. People are not really parking money in banks anymore, their savings, households. The RBI governor also pointed this out. It's now more in mutual funds and slightly more risky investments like that.
Yeah, I think your analysis is bang on. As Vishwas also pointed out, the people are more infusing the money in the stock market, and their focus is changing. But overall, let me give you a statistics here. Last year, when the people have filed the return, 85% of the people still opted for old tax regime, because people still link their tax benefit with the investment pattern. Though government is saying that do the investment, they're not discouraging you in doing the investments, but they don't want them to link it with with the tax benefits, because anyways the tax benefits are very very minimum. It's 1.5 lakhs, and then the way the incomes have changed over the years, but this limit has not increased. Let's see how this will improve, because the government is continuing giving a lot of benefits on the new tax regime. Interestingly, there's an additional benefit of 4% which has been given when the people are investing in national pension scheme, and that to 14% of the salary without further limit. So this is a huge benefit which people get if they do that. And coming back to your point that obviously people are not putting the money in the bank, they're investing in the stock market and mutual funds and all. That's true, and that's the reason maybe the government has increased the tax rates from 10% to 12.5%, and forcing people to go back to the bank, do some FD and all. So I think overall this is what it is. Let's see how the people will take it, and this 15% shift will go to what level.
Okay. So very quickly, overall, how would you rate this budget, Akhil? On a scale of 1
I have a mixed feeling. Because taking away indexation is a big change. I think Vishwas talked about that earlier. It will have a major impact. We need to look into the numbers, how this will impact to the people. Obviously, the rate 20% has come down to 12.5%, but that's there. But overall, I think it's a bit of balanced one, while giving benefits to the people who look for new tax regime, and coming out with strong. I think market has not taken it in a positive way. You can see since morning, and let's see how this gonna be, in the future, how this gonna impact on the market.
Yeah. So So I think the press conference is starting. So I think we will, quickly cut to the Finance Minister's press conference. We want to hear from her after the budget. So Vishwas, Akhil, thank you so much. I think let's just cut straight to the press conference.
Thank you.
Thanks.
Thank you. Thank you.
Thanks.
Secretary Deepam Shri Tarun Kant Pandey ji, Secretary Financial Services Tuhin Kant Pandey ji, Secretary Financial Services Dr. Vivek Joshi, Secretary Revenue Shri Sanjay Malhotra, and Chief Economic Advisor to the Government of India Dr. V. Anant Nageshwaran to this press conference. Friends, I request you to follow this following point of order. It would be good if you each of one ask one question each. That will facilitate others to ask questions, and we will try to take most of the questions in this press conference. Ma'am will directly answer your question without any preliminary statement. Over to ma'am. Over to question. Anybody? All question 71, please.
मैम तरुण फ्रॉम जी बिजनेस। मैम आपने आज के बजट में शॉर्ट टर्म कैपिटल गेन और लॉन्ग टर्म कैपिटल गेन दोनों के रेट्स को बढ़ाया है, और रियल एस्टेट में आपने इंडेक्सेशन के बेनिफिट को ख़त्म किया है। तो मैम क्या हम माने कि जो इक्विटी है अब आप उसको बाकी एसेट्स क्लास के बराबर लाना चाह रहे हैं, इस वजह से आपने लॉन्ग टर्म कैपिटल गेन के टैक्स रेट को 10% से 12.5% किया?
First of all, thank you very much for coming here. After having heard the budget, I chose not to make an opening statement because you've heard me almost for 1.5 hours, and I'm sure you have, you're eager to know what is in the budget and also seek clarification. For your, just for a matter of drawing your attention, we've put up a single slide which has used the word employment as an acronym to capture that is everything in the budget. So each letter actually highlights the important points of the budget, and we can elaborate more on that a bit later, but employment captures everything to do with this budget, and I would like you to, for a moment, spend a time on it. And deriving from that, everything which has been said in the budget falls in place. But with that said, yes, your question is on, the point there is we wanted to simplify the approach to taxation, also for the capital gains. One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we've worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets. With that said, I'll ask Somanathan or who is going to elaborate, Sanjay, on the specifics.
So you had, there were I think 2 or more parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. if it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed, all unlisted are at 12.5% long term. And all are at 20%, I mean, equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up. And Sanjay, would you like to add anything?
One point I would like to add over here is that we also need to keep in mind as to the kind of people who are actually paying these taxes. The capital gains on the securities, the listed securities especially. And so over there, when we did this analysis for the year 22-23, we found that about 88% of the tax is actually coming from people who have an income of more than 15 lakh. 61% of that income is actually coming from people who have an income of more than 1 crore.
That is income on capital gains on this.
And we are all aware that otherwise, the standard rate is, about 30%. And for some it can go up to 39%. So this marginal, very small marginal increase is actually impacting only those, primarily those who have an income of more than 15 lakh rupees per year.
Okay, number 3.
On capital gains.
Ma'am, Timsi Jaipuria from CNBC TV 18. You announced a very lucrative new tax regime with changes in tax slabs. A lot of new changes are there in the income tax side, on the revenue side. And in the speech, you mentioned that revenue foregone will be around 29,000 crore rupees, whereas government will now try to mobilize around 30,000 crore rupees. What will be these revenue mobilization measures, and from where do you think this foregone revenue will be recovered? If you can highlight, where are you foregoing the revenue and where are you going to recoup this revenue from?
First of all, it is not just because we've mentioned it in this budget, but the attempt to widen the tax net is something which we've been repeatedly saying, that India's tax net will have to be widened, whether it is in the direct taxation or indirect. Second, there are also now the PSU dividends which are improving because their valuations have gone up really high. And their performance is also now substantially increased. So revenue mobilization is not just tax-based, you have non-tax revenue mobilizations which are also coming up. Then we had, for almost now 3 years, been talking about asset monetization, which is not selling of assets, but optimum utilization of those assets which are lying in the form of unutilized stadiums or land which is available with PSUs which can be utilized for better purposes. That's a third one. Fourth, you're also looking at generating resources from newer areas. So in all those, the revenue is going to be mobilized better, and as a result of which the revenue foregone will be now made up for, is our expectation. We've said that in the budget. In my speech itself I mentioned it, and I'm sure there are secretaries who will want to add to it. Sanjay?
Ma'am, I'll give the for details. 37,000 crore, 29,000 crore in direct taxes and 8,000 crore in indirect taxes. So 29,000 crore direct taxes primarily comprises of 3 taxes, which is the increase in the STT only on derivatives, which is only on futures and options. And secondly, the buyback tax, which is to be now done in the hands of the recipient. While on the one hand it will rationalize the tax and be more equitous and fair, because those who should be paying the taxes, higher taxes, in the higher income groups, they will pay higher tax, and those who are in nil tax category or in lower tax category, they don't have to pay a tax or a lower tax. While it does that, at the same time, it does bring in some revenue also, about 4,000 crore, and remaining, about 15,000 crore should come, from the capital gains taxes. On the indirect taxes, we are losing, as I said, about 8,000 crore primarily on the reduction in duties, especially in gold. There is a huge reduction from 15% to 6%. And then there is revenue foregone because of the personal income tax rates and the standard deduction being allowed in the new tax regime.
280, please. Backside, please. Give the mic.
Good afternoon, ma'am. This is Surabhi from Business Today. Ma'am, the angel tax has been abolished, which is a very welcome move. But just wanted to understand that one of the things the angel tax was also doing was checking money laundering concerns. So could you explain how these will be taken care of now? Thank you.
Thank you very much, and I'm glad to hear it is welcome. You've been raising this issue as with many others outside of media also saying, are you considering it? Although it was introduced during the UPA government and it was introduced in 2012. 2 years had passed, and since after that when we came in, we tried keeping as a good governance principle, government being a continuum, the tax continued. Although we tried giving carve-outs for startups and also making it simpler, bringing parity for the non-resident Indians, the way in which they've been treated as opposed to the Indian investments and so on. Today we've announced that we will indeed remove it. Exactly the details, Sanjay, would you want to elaborate on it?
Yes, sure, ma'am. So we should be aware that this is actually a tax measure. It's not really a money laundering issue, but money laundering issue was being tackled through a tax measure. So first of all, I want to clarify that this tax, there are other provisions in the income tax itself, first of all, to find out the source of these funds. Number two, there is already, the Prevention of Money Laundering Act, which continues to be in existence. So if there is money which is being laundered, money, being paid as a bribe or for use in, other purposes for terrorism, etc., there are enough laws, including the Nyaya Sahita, Bharatiya Nyaya Sahita and the Prevention of Money Laundering Act to take care of those issues. While on the other hand, now some genuine money for investment, actually, there is this deterrent provision no longer exists, while provisions for money laundering remain, and they should be sufficient to cater to it.
I would add that there are also certain provisions of the Companies Act which can be invoked if there is deliberate undervaluation of shares. So there are other legal remedies. The balance here is between preventing money laundering but accidentally also preventing investment. So that balance is what we are seeking to get it right.
211, backside. Yeah.
Hello, ma'am. Prakash Pedashi from ET Now. My question is, will the increased STT be applicable from April 1 or prospective? And if from April 1, will there be retrospective tax calculation for the increased amount?
It's not retrospective. It is with effect from 1st of October 2024. So we are giving sufficient time for the exchanges and the people, who collect this tax to put their systems in place to be able to collect it. It's not retrospective, it is prospective.
13. 11. 11.
11. Ma'am, Karishma here from Business Today. Ma'am.
Congratulations to you and everybody. Ma'am, my question is on this special assistance to Andhra Pradesh and Bihar. 15,000 crore is the number that you've given for Andhra Pradesh for this financial year. Is there further assistance that you are looking at, or is it going to be need-based in terms of the amount?
I've already mentioned in the budget speech that 15,000 crore is coming through the multilateral development assistance, which we borrow from the multilateral banks, whether it is World Bank or ADB or AIB, whatever. And I've also ended that paragraph by saying further assistance will also be extended.
There is no definitive amount?
No.
152. मैम आलोक प्रियदर्शी फ्रॉम CNBC आवाज में मैम सवाल यही है कि जिस तरह से आप लोग न्यू टैक्स रिजीम को प्रमोट कर रहे हैं, इस बार भी आप लोगों ने स्लैब में चेंज किया, स्टैंडर्ड डिडक्शन बढ़ाया, तो ये मान के चलें कि न्यू टैक्स रिजीम के जरिए आप मिडिल क्लास को राहत देने की कोशिश की है इस बार। ओल्ड टैक्स रिजीम को लेकर क्या कोई सनसेट क्लॉज है? क्योंकि आपने कहा है कि जो इनकम टैक्स एक्ट है उसका हम लोग कंप्रिहेंसिव रिव्यू करेंगे, तो रिव्यू में क्या ये मान के चले कोई सनसेट टाइम आएगा ओल्ड टैक्स रिजीम को लेकर?
अभी मैं बोल नहीं सकती हूँ। जरूर हमारी इरादा ये है कि सिंपलर टैक्सेशन रजीम होना चाहिए, और सिंपल टैक्स रजीम की ओर अगर हम जा रहे हैं ये रिव्यू के द्वारा, वो ही हमारी मकसद होगा कि सिंपल कर दो। ओल्ड टैक्स रजीम को सिंपल करने के रास्ते पर ही ये नया टैक्स रजीम आया है। सनसेट होगा कि नहीं होगा वो अभी मैं बोल नहीं सकती हूँ, वो रिव्यू करने के बाद ही हम एक डिसीजन लेंगे।
और ये एक आंकड़ा मैं आपको दे दूं कि इस बार पिछली बार जो हमने परिवर्तन किए थे नई टैक्स प्रणाली में, तो 70% लोग अभी तक जो 4 करोड़ के लगभग हमारे पास में रिटर्न प्राप्त हुए हैं पिछले वर्ष के, 70% ने इसको प्रेफर किया है बनिस्बत की पुरानी प्रणाली को। तो बड़ी तेजी से लोग नई प्रणाली की ओर आकर्षित हो रहे हैं और हमारा यही प्रयास रहेगा।
Yes.
Ongoing
period.
Not yet. I mean, more returns are coming in.
Yes.
271.
Hi, ma'am. This is Sumit Chaturvedi, ET Now. Ma'am, the corporate tax for foreign companies has been slashed to 35%. I want to understand the broad intent of this intention behind this decision, and what kind of benefits to economy increase in investment you are expecting.
You've, in your own question, answered it. We want more investment to come into this country. So that is why it has been brought down.
$95. Just to add to that, there was a widened differential between foreign and domestic companies which arose after the tax cut in 2019. When the domestic rates were cut, the foreign rates were not cut. So there was a widening of the gap. With today's change, there is still a higher rate of tax for foreign companies, but it is not now disproportionately higher than domestic, and therefore this is something where, according to the feedback received from industry, we expect more foreign companies to invest now that this regime is adjusted in this manner.
Good evening, ma'am. This is Pal Singh from Outlook Business. So you have earmarked a significant allocation towards rural infrastructure today. So how much of a boost to consumption and overall demand are we expecting here from this allocation happening?
So it is difficult to quantify what would be the accretion to demand coming from. I mean, the obvious increase is whatever we have increased. But yes, would there be a multiplier? Probably yes. I think with the Awas Yojana Gramin and the Gram Sadak Yojana, these two do have a lot of multiplier effects as well. Traditionally, for capital expenditure, the multiplier has been calculated at somewhere around 2.5 to 3. In the Awas Yojana, it may be a little lower. But yes, there would be a substantial multiplier. I don't have a precise calculation.
But other than the Awas Yojana and Sadak Yojana, Gram Sadak Yojana, there's a major push towards the corridors. For instance, I mentioned in the context of Bihar, I mentioned in the context of Andhra, 2 corridors which are moving, one from Visakhapatnam to Chennai, the other moving from Hyderabad to Bangalore, Buxar, Purnia, and so on, and building of the Gaya node in the Amritsar to Kolkata, are all towards building infrastructure in the rural areas in order that we attract more investment and enable transit of goods in those huge corridors. All these are essentially going to the rural areas in a big way. And therefore it is not just through PM Awas Yojana and Sadak Yojana, but major investments in strengthening the corridors, building nodes, and therefore also in improving the rural infrastructure is happening.
11.
Ma'am, I'm Maria Shakir from NDTV and NDTV Profit. Congratulations for creating history today by becoming the only finance minister for having presented 7 consecutive budgets. Ma'am, my question to you is about the first-timer scheme, because as you said, that employment perhaps sums up the essence of this budget. Would there be more blueprint coming out as to how this first-timers scheme will be playing out, and what will be the role of private sector?
Just 1 minute. See, this Prime Minister's package that I announced has 5 different schemes. The first timers is, I would think, one of the very, very innovative initiative. So what we are doing there is to be able to provide first timers 1 whole month's salary as subsidy. And this will be put into their account as direct benefit transfer, but possibly in tranches. When an employer picks up a first timer, and this is through the EPFO that you get to know that they have paid their provident fund amounts, and therefore the first timer indicator that we are talking about will be established. So they can't just say one of the existing employee is a first timer and claim it. There are enough checks and balances in the system to make sure that indeed the first timer is coming in. And then the first timers will be put through that learning curve, and this will help them to acquire skills so that they become fully productive. This kind of a subsidy giving, 1, you give the first one month's salary. 2, you're also giving both for the employee and for the employer subsidy. So the applicable person for whom it is being given may even draw a wage up to 1 lakh rupees. But to the extent of 15,000 is what you're giving as a subsidy. The installments, as I said, for the first 1 month wage that you want to give will be done over 3 installments, direct into the first time employee's account. One compulsory measure that we are bringing in there is to make sure that the employee undergoes online financial literacy course before claiming the second installment from the government. So he may be a qualified engineer, he may be a diploma holder, he's a first-time employee in an office, he becomes a first-time employee and the employer also claims that he's been recruited. We try giving him the 15,000 rupees. He may have a salary of 1 lakh, but up to 15,000 rupees is what we are going to give. And in that, if you're giving 3 installments, the first installment will be given. But before he draws the second installment, he should undergo an online financial literacy course so that he can claim the second one. So we are not training him in engineering, we are training him in financial literacy. Post that, of course, the place where he goes to work, he's going to be working in any case. Then subsidy to be refunded if in case the employer removes him from the work within 12 months. So the employer gets a subsidy as well, but he will have to refund it if within 12 months this first time employer has been removed out of the work. This will cover, and we expect it to cover, 1 crore persons per annum. And the scheme will run for 2 years. So up to 24 months, you can have new employees brought in, new first-time employees brought in, for whom the government will give 15,000 rupees as, from our side, 1 month, what we think, 1 month's salary. Although his salary may be any amount, but to a cap of 1 lakh. And then he undergoes some financial literacy course, post which the second installment and the third installments can be withdrawn, put into his account. But most important is, if the employer removes him within 12 months, the employer will have to refund the subsidy given to the employer. So that's how that scheme works.
278.
If I may just add, details are available in the budget speech in the annexure on page 31. So there are details of all the 5 schemes in this package. If you go through them, there's considerable amount of detail which you can get.
Hi, good evening. This is Priyashmita from Informist. I have 2 points from the budget that I would like to ask. The first is nominal GDP has been pegged at 10.5%. And we have seen that growth is on a high momentum, and even the RBI has pegged growth at 7.2%, and the Econ survey said that it is going to be between 6.5 to 7%. So a 10.5% nominal GDP looks a little conservative. What is your view on it? And the second is that there's a mention that beyond FY26, you would want to reduce your debt to GDP. And you've mentioned that, the 4% debt to GDP it's a thing of the past. So what do you think is a sustainable debt to GDP or a desirable debt to GDP at this point? Thank you.
What was the first question again?
Conservative nominal GDP projection.
See, 10.5% could be a combination of 7% growth and 3.5% GDP deflator. So combination of wholesale price plus consumer price could easily be 3.5%. That's a very likely scenario. So 7 plus 3.5, yes, it is slightly conservative, but I don't think it is way off what is likely. Or it could be 6.5% growth and 4% inflation as per the deflator. So I think the number is reasonable, slightly conservative, yes, but we would prefer to achieve the numbers. Second, on the path after 26-27, which has been outlined in the Finance Minister's speech at the end of the Part A. So the commitment, as she has mentioned, is to endeavor to reduce the debt to GDP every year. That is in future the fiscal consolidation path. What is the percentage that would result in that fiscal consolidation is not something that we are disclosing here today or can disclose today. It will depend on circumstances. But there is a commitment to lower the debt to GDP ratio. So if every year it has to be reduced, there will necessarily have to be a particular level of deficit which we cannot exceed. And that will depend on prevailing growth rates, interest rates, and the other parameters which go into the calculation of the debt dynamics. But I can tell you that it is most likely to be a figure not above 4.5%.
249.
मैं सुनील सौरभ बोल रहा हूँ। मैं आप पहले तो आपको काफी बधाई दे दूंगी, बहुत अच्छा बजट आपने पेश की है। दूसरा मुझे ये जानना है कि रेलवे के लिए क्या कुछ खास रहा बजट में?
Which organization you are from?
कौन सा पत्रिका?
पेपर में हूँ, लोक भारती पेपर है।
Sorry?
लोक भारती।
लोक भारती।
जी हाँ। तो पहले तो बधाई दे दिया हूँ मैं आपका, बहुत अच्छा बजट आपने पेश की है और रिकॉर्ड भी की है। 7 साल से लगातार आप वित्त मंत्री के रूप में काम। मेरा कहना है कि रेलवे के लिए क्या कुछ खास हुआ, क्योंकि कोई जानकारी हम लोग को अभी तक नहीं मिली कि रेलवे के लिए क्या गया है। दूसरा, मैं रेलवे में सीनियर सिटीजन्स को कंसेशन मिलता था, आप यहाँ पीआईयू में है, पीआईयू जर्नलिस्ट को भी कंसेशन मिलता था। कोरोना में वो बंद हो गया, कोरोना को ख़त्म हुए भी 2-3 साल हो गए हैं, तो फिर से ये बहाल नहीं हुआ। क्या इसकी उम्मीदें हम लोग कर सकते हैं कि आगे बहाल होगी या नहीं?
रेलवे का जो एक्सपेंडिचर बजट है नेक्स्ट ईयर, इट्स 255,393 crores, which is the highest ever, and it's a very substantial increase in recent years. So that is a very large amount of investment in the railway. So I think there is a very adequate provision.
जर्नलिस्ट के लिए कॉन्सेशन
ठीक है, सुना।
277 प्लीज।
इसमें सीनियर सिटीजन और पीआईबी जर्नलिस्ट को भी जो स्लैब में रिवीजन हुआ है उसमें फायदा है। सीनियर सिटीजन को फैमिली पेंशन में स्टैंडर्ड डिडक्शन का फायदा हुआ है रेलवे में। अच्छा ठीक।
हेलो मैम, दिस साइड हर्ष कुमार, दिस साइड फ्रॉम बिजनेस।
वो बजट का फायदा जो दिया है सर वो भी तो मिलेगा सीनियर सिटीजन्स को और सबको, रेलवे में भी मिलेगा।
Hello ma'am, Harsh Kumar this side from Business Standard newspaper. Ma'am, during your speech you mentioned about the FDI liberalization. Can you give a bit detail about it?
We are trying to, since 2014, bring in ease of doing business in India, and in every sector where there was only 26% allowed for FTA, we raised it to 49, and then where it is possible we've raised it to 74, and so on. So there's been a consistent, continuing effort to relax our policy towards FTA. First it went sector by sector, then there was this approach taken so that most of which can go through the automatic route. So in that process, further simplification if necessary, we are willing to do, is what is conveyed.
Also ma'am, you have like increased the Mudra loan limit to 20 lakhs, like that cap. So can we expect the increase in Shishu, Tarun, like their types increase? So how much it will be? Can you give detail on that?
We've said this only today. See how this works.
Okay, thank you.
I request you to please one question each person. 123 please. Here.
Shrimi Chaudhary here from Business Standard. I just wanted to understand that budget proposes withdrawal of equalization levy. So if you could just give some explanation of what led to that, what is the intention behind that, keeping in mind the pact between India and US which has ended on June 30th.
No, as the Pillar 1, Pillar 2 negotiations have been going on since 22. And since then, one of the things which was becoming more than obvious was, if at all we are going through this Pillar 1 and Pillar 2, which we intend to, the negotiations and the OECD, backed by the US administration, have all been pushing for this. We wanted a fair solution, so negotiations have been going on. But the point of contention from then has always been, should we collect an equalization levy then, if at all we are getting into this global understanding through the Pillar 1 and Pillar 2. In any case, for India, equalization levy also meant for those who are living abroad that you were holding it, but eventually they are going to only adjust it somewhere. So in the interest of moving towards Pillar 1 and Pillar 2 solution, which the negotiations are still going on one aspect of it, on the other, in all probability, we are close to a conclusion. It was necessary for us, through the Parliament, to take steps to ensure that we are entering into that scheme of things without this equalization levy hanging on us, because this was important for us, but if it is a global system, this cannot continue. And therefore, with a positive approach towards the Pillar 1 and Pillar 2, we've moved forward to inform the Parliament that we would like to close this.
270.
I may clarify that it is only the 2% levy which has been withdrawn. The 6% levy which was earlier imposed, that continues.
What will happen to the tax collected so far from all these companies under this 2%
That has already been collected. We'll see. I mean, it is only this withdrawal is only prospective.
Ruchika from Business Standard this side.
Ma'am, the miscellaneous capital receipts have seen an increase in this budget to almost 50,000 crore. Is there the miscellaneous capital receipts?
Okay.
Can you share the government's game plan as to how will we achieve this increase?
The miscellaneous capital receipts are budgeted as 50,000 crore, which was like 23-24 also it was 51,000 crore, the interim budget. Now it's 50,000 crore, 24-25, and this combines with all kinds of receipts which are otherwise disinvestment receipts, asset monetization receipts, and other kinds, which will be clubbed with that. So this budgeted figure is 50,000 crore.
Ma'am, very good evening. Sapna Das here from CNBC. Ma'am, two questions. On the incentive-like employment scheme that you have announced, 2 lakh odd crore is your overall fiscal envelope over the duration of the scheme. Could you give us a sense as to, we are already almost halfway through the current financial year by the time you pass the budget. So practically around 7 months will remain for the financial year. But any kind of an allocation that you have done for this scheme for this year, ma'am? One is that. And ma'am, just a corollary also on the miscellaneous receipts question, though not very much part of this budget, but nevertheless, ma'am, government had a very, kind of a bold privatization program. Do we understand that this is now being calibrated? That's it, ma'am. Thank you.
First question. As you rightly observed, there are only this is not a full financial year. The schemes have just been announced. They will now go through a process of quick design, appraisal and approval. However, budget provisions have been made for these schemes, partly in the Ministry of Labour and Employment and partly in the Ministry of Corporate Affairs for the internship scheme. So from memory, I can be corrected. I think it's 2,000 crores has been provided for the internships in the Ministry of Corporate Affairs, and about 5,000 crores has been provided in the current year in the Ministry of Labour and Employment. But we stand committed to funding them fully to the extent that may actually be required. These are just very rough estimates based on how much time it might take to kick off. On the miscellaneous capital receipts?
Well, I think in the interim budget, FM had announced, we are going for a holistic strategy for management of equity in PSUs. And I think which includes, value creation and also, using the performance, the capex, the dividends and consistent dividend policy and the capital management all together, and also the calibrated disinvestment strategy, which also includes listing and market dilution, but all together in a holistic way so that value maximization is there. I think the same strategy is going to continue.
122.
Hi, Rishabh with NDTV Profit here. I have two questions. One on the space fund that was announced, the 1,000 crore fund. What will be the composition of this? Which will be the nodal agency, and what sort of startups will the government invest in? And on the NPS, you also mentioned that the NPS committee has made progress in the speech. Could you elaborate a bit on that?
So we have seen that there's a lot of interest of the private sector on participating in the space program. Hitherto, the participation used to be on being a supplier to the space program, but now development of the satellite, mounting experiments there, they're getting into that space. And if you recall, even FDI was opened up in that sector. This is an attempt that Indian entrepreneurs, Indian startup who want to risk capital to get into that area, that should be facilitated. We believe that the amount is 1,000 crore, but that can have a very large multiplier effect. And that's what the scheme announces.
On your question on the, I think your second question was on the government NPS, right? So, as you know, there is a committee which is looking into it. The committee has done a lot of detailed calculations of the fiscal implications of different ways of addressing what are the expressed sort of priorities of the employees. We have been in dialogue with state governments. We have had discussions with each and every state government. We have met the staff side of the government has a staff consultative machinery, a formal machinery. We've had 4 meetings of that machinery to understand what are the staff's priorities. And our attempt is to design something that is fiscally prudent, but also meets what are the core priorities of the staff in terms of having a secured retirement income, which provides for their needs. So this is a balancing act, because obviously there are costs. The more you give, more expensive it is. And so we are at an advanced stage of working out various options, and we are also discussing these options with the staff side. Just to correct the budget estimate that I gave earlier, 10,000 crores has been provided in Ministry of Labour and Employment for the new employment schemes, and 2,000 in Ministry of Corporate Affairs. Yeah.
125.
Good afternoon, I'm Nikunj from Reuters. A follow-up on that FDI facilitation, you said that government will take steps to facilitate FDI. The Eco Survey also yesterday said that the government should import capital from China so that there's a right balance between investments and trade. So will the government also take steps to quickly facilitate investments from China that have been pending for long? And secondly, you've come up with an NPS for minors. So will that also have some sort of tax benefits to nudge people to enroll for NPS so that a pension coverage increases? Thanks.
See, Economic Survey gave its view on the investments from China. As things stand today, investments do go through the Press Note 3 process when it comes from China or from any of our neighboring countries. So that process is still on. Economic Survey has indicated that it might be time for us to open up and allow for. So that's a Economic Survey. I'm glad that the Secretary is seated here. It's normally an arm's distance. But that doesn't mean that I'm disowning the suggestion. You want to say?
10. In general, as you can see, our aim is tax code simplification and not complication. So beyond that, I don't have anything specific on that. But the general direction of travel is obvious. We are not creating more and more tax deductions for individual tax instruments.
Respected Madam, मेरा नाम नरेश वत्स है और मैं स्वतंत्र पत्रकारिता करता हूं। आज जो आपने किसानों के लिए और ग्रामीण क्षेत्र के आधारभूत संरचना के लिए काम किया है, उस पे 2 तरह की राय आ रही है। एक राय तो ये कहती है कि गालिब ने ये कहकर तोड़ दी तस्बीह, क्यों गिनकर नाम लूं जो बिन मांगे बेशुमार देता है। एक वर्ग तो इस तरह से तारीफ बजट की कर रहा है, लेकिन दूसरी तरफ प्रतिपक्ष के नेता राहुल गांधी ने कहा है कि आंध्र प्रदेश और बिहार पर जो दरियादिली दिखाई है, कहीं न कहीं ये लगता है कि ये कुर्सी बचाने का बजट है। अखिलेश यादव जी भी ये कह रहे हैं, आप कैसे देखती हैं?
जिन इंडी अलायंस का मेंबर्स साथ होकर के भी 230 पार नहीं किया और जहां बीजेपी अकेला 240 तक पहुंचे और प्री इलेक्शन अलायंस के साथ आज सरकार तीसरी बार बनाए, प्रधानमंत्री जी का तीसरी बार स्वतंत्र भारत के चरित्र में पिछले 60 साल में जो नहीं हुआ अभी हुआ है। कुर्सी बचाने के बात करने वाले पार्टियों थोड़ा सोच ले। उनके अलायंस 230 कुल मिलाकर कितने पार्टियां थे? 25, 26 पता नहीं, मैं गिनी नहीं, बट इंडी 37 पार्टीज कुल मिलाकर के 230 पार नहीं किया, और वो बोल रहे हैं कुर्सी बचाने के लिए। जब प्रधानमंत्री मोदी जी तीसरी बार प्रधानमंत्री बने और देश के लिए इतना घोषणा भी कर रहे हैं जिससे भारत देश का हर राज्य सामने आए, डेवलप हुए, और 1.50 लाख करोड़ इस बार बजट में स्टेट्स के लिए हम दे रहे हैं बिना इंटरेस्ट 50 साल के लिए फ्री। फिनांस कमीशन तो हमारे उनके सजेशन में इसका जिक्र तक नहीं किए, हम ही कर रहे हैं स्टेट्स के साथ काम करने के लिए। हर स्टेट का उनके अपने अपने प्रोजेक्ट्स जो प्रोसेस के चलते हुए आता है उन सबको हम मानते हैं और ज़रूर उनको जो फाइनेंस करना है वो हम करेंगे, मगर जिक्र इसलिए नहीं किया बजट में कुर्सी बचाने। जब उनका टोटल को एक और बार चुनावी सीट जो जीते हैं वो 101 और बार उसको गिनकर देख लें, 237 पार्टीज कुल मिला करके कुर्सी बचाने वाले बात बोलने का अर्हत अधिकार उनके पास नहीं होता है।
121.
Ma'am, Meghna Mittal from Money Control. In the union budget, you have announced financial support to MSMEs for shift to clean energy and also a new mechanism for credit so that they do not go into stress and they do not turn into NPAs. Any details on that?
I'm so glad you asked this question. I'm really glad because this budget, and I don't want to say it because I've presented it, I'm so grateful that the Prime Minister looks at every sector and says, what are we doing for them? What are we doing for? This has been his approach always. But this time around, we've spent a lot of time understanding also from those stakeholders who had consultation with us pre-budget. And MSME's request it has been for now several years that when they reach the SMA 1 stage itself, they get to be very, very tensed because banks stop their finances, meaning banks no longer lend to them. They are stressed as it is. And if they are stressed as it is, and if there is this threat that the bank will not further give them working capital, sooner, by the 90th day, they become NPAs. In order to give them a good workable solution, and I'm indeed grateful to this entire team of secretaries here, they spent a lot of time also talking with RBI to see how best we can address this issue. And RBI has also a very well established framework which we are quite respectful of, where banks are clearly given a bit of a margin to handle MSMEs at the SMA stage 1 itself without pushing them to become SMA 2 stage and then at the 90th day announce them as non-performing assets. So what actually has happened now, having discussed with the RBI, is that we'll provide them with a fund which will help them to have some kind of government guaranteed as liquidity, or the banks can then, on the basis of the guarantee being given, on the back of the guarantees which are being provided by the government, lend them working capital and keep them moving. And if they restore themselves, they're going to be better off. So on this principle, I'll certainly ask you or Vivek to speak and explain it to you all.
As FM has already explained about the credit guarantee scheme, this will certainly facilitate the term loans without collateral or third-party guarantees. Then new assessment model for MSME credits, which will be based on their digital footprints and the kind of payments they are making, such as their PF contributions, salary payment, and other transactional data. This will help the banks in